turn off the microphone. I hope not. But it didn't turn that on. Okay. Nothing's ever easy. There we go. All right. Good morning, everybody. I'm starting early because they did a bit of a raid this morning. I'm ever don't trust what I see. Others can be a little bit more. Charitable, but I'm not that charitable. I think this was coordinated this morning, and I think the cover. Let me just let me sign in. Like I say, I was going to come on after lunch, so I didn't really prepare anything, but we can wing it effectively. There's enough to talk about, and this is a buying opportunity. I would take this like a gift. That's how I would take it. If I had any money, that's how I'd take it. Okay. I'll give you some of the quotes out there. The only thing on my screen that's green is CJYL at up less than a penny. Railtown is down 5 cents in the United States at 58.7. G-Bucks is down 13 cents. GDC is down 10 cents. Finger is down 2 cents. So it's kind of a flat day all around. It's nothing, unless you're a day trader. And if I can find it, I'll show you a clip where Warren Buffett says day trading is gambling, and I agree with him. It is gambling. Let's turn this a little bit so the sun doesn't reflect so badly. There's still some sun there, but it's a little bit better for me. Not so good for you. This is our count. 8,645,723. 8,000,006. So call it 8.5 million. And we have 6.1%. It's pretty darn good. Pretty darn good. They want to shake you out today, and do not let them do it. I think what happened today is there's a Simply Wall Street blurb that is not, it's just kind of innocuous. But if you don't sign into it and you just look at the front page of it, I'll show it to you. I have it here. I got to download it. If you, I got to take all these off. Delete. Sorry, I'm not trying to show you all that. I'm trying to delete. Yeah, I'm just going to delete this too, even though I might wish I had kept it. Delete this. Delete this. I may regret all that, but I need space. So that's 8, 9, That's 16. They're never going to let me do all that. See how many they give me. They'll say, oh, you sure have a lot of files. Yeah. So I'll just do it in 2 stages. So this is what came out. That's not it. I don't know what's the first page. I don't know what the first page is. Anyway, let's just go through it. I opened it up, but they put this out if you go to rail.cn, and if you don't sign in, it shows you. That's what I'm trying to find for you. What it shows you here, is that it? No, darn it. Let me delete some more. Delete. All right, let me see if I can go. Add files. Maybe it's here. I see. Maybe it's these two. Maybe I can add these. All right, let me see what happens if I have something else to show you. Yeah, maybe it's this one. Yeah, here it is. The first one, if you don't sign in, the only thing you can see is this page. Now, it's innocuous. It's got 3 green check marks up there, but it shows here, and it shows no debt, which is great. But it shows a limited amount of cash, 2 million, and so that's a good down here with the big blue box. Short term, they have 2 million in cash, Canadian, and their liabilities are 1 million. They say that short term. I guess you believe them. But here's the long term over here. It shows Canadian assets 90,000. And the key is technology companies do not have traditional, you don't do a market value versus assets calculation. But my opinion is simply Wall Street. Now, this is me. I might be too conspiratorial. Put this out so the shorts could tell the regulators why they sold off. If I were a regulator, I'd say, "What the hell? You're risking money, and you didn't know that they only have 90,000 in assets long term. What the hell? And now you're going to suddenly dump out." But they just want cover. So if they go to court, they can have an excuse, and then they sell off. They sell off, trying to hit if you have stop loss orders. That's all. They're just trying to shake you out. Now, on the other hand, it could be simply that somebody's taking a profit, but it's a huge buying opportunity. There's nothing wrong. It's all their stupid reindeer games. And we've learned this before, so we don't have to be as scared of it. We just simply do not have to be as scared of it. All right, that's the same chart. And then that's this one. All right, let me see if I can find. I'm going to delete this. And then I'm going to go to, this is the next chart. And like I say, if you open it up, the rest of the news is very comforting. But most people don't. And the whole point isn't to do analysis. They don't do analysis. They want something out there that can trigger selling. And then to hot money, the emotional money. I've got to, oh my gosh, something's wrong, get out money. That's all they're trying to appeal to. But if you look on this page, this is the second page, and you have to give your email in order to get into this. It shows Railtown, it's a green check mark. Railtown short-term assets, 2.2 million cash, exceed its liabilities. That's good news. Long-term liabilities exceed long-term assets. Sorry. Rail's short-term assets exceed its long-term liabilities. That's a green. That's great. And then you look at the graph, they have no debt. And then you go down here, you look, debt level, debt-free, reducing debt. They haven't had debt for 5 years. Although, I don't know if it looks like there's a little blip where they had some. But what it says is Rail had no debt 5 years ago. It's unbelievable. The company's got no debt. So the debt level, Rail is debt-free, reducing debt. Rail had no debt 5 years ago. Assets, cash and short-term investments, 2 million. Well, here's another thing the boo-birds can say, well, the market cap is whatever it is, 100 million. They only have assets of 2 million. When if you look at Facebook or Apple might be slightly different because they also sell hardware. But if you look at Facebook, Apple, I'm sure even Amazon, I don't know how, I'm not an accountant. I don't know how they book their inventory or their warehouses. But certainly a Google or a any of these I can't think of another one. These technology companies that are all data, they're all software, there are no assets. So this is just trying to get amateurs, people that have money they feels at risk to sell. So then it says stable cash runway. Railtown has cash money for 4 months. Well, if you want to be negative, like Tony, make sure you have no dinero. You can interpret that negatively, but I interpret it that the company's been very parsimonious in terms of issuing new shares, and they've got to finish this acquisition. Anyway, forecast cash runway. Rail is forecast to have sufficient runway for 3 months. Now, Tony, make sure you have no money. Dinero is going to probably spin that negatively, but ignore him. And then dividends, all red because they don't pay any dividends. They don't have any buyback. I think it's pretty easy that we can skip that page. Makes sense. Dividend yield versus market, not applicable. I think so. It's a bunch of red check marks, but it's not relevant. You don't want to buy a technology company in its early stages that's foolish enough to pay a dividend. All right, so I'm missing a chart. Oh, there it is. Next chart. Earnings payout to shareholders, cash payout to shareholders. Again, it's an irrelevancy. But it gives Tony, make sure you have no money, dinero, aspects that he can poo-poo. And then the shorts can say to the judge or the regulator, oh, I saw this report and I saw Tony's analysis and I just had to get out. I took it as an opportunity to lighten up. It's all such crap. So sick of it. So sick of it. And you think you can win? We're going to win here, though. We're going to win here. All right, so this data is for the analysis. Let's see. Corporate financials, 10 years. Analysts' estimates, 3 years. Market prices, ownership, management key developments, model in Snowflake. I didn't click any of those open because I was trying to get on quickly, but let's see. You can go on Yahoo and get it. Analysis model used to generate this report is available on our GitHub page. Remember, GitHub is Microsoft, and Railtown's partners with Microsoft. All right, let me go on to, there's one more page that, turn the page on a long, lonely highway. I've got to bring up two more charts. Add file, okay, let's see. I guess it's all of this, and probably that. Let's see what happens. All right, let's do that one. All right, so the company analysis and financial data, I mean, it's really irrelevant. 76, 77. I already did that. 78. Already did that. All right, so let me delete that. Delete. Delete. Delete and redelete. We're on a bridge. Redelete. Jumped off. All right, let me see if I can just show you the last two. Let's just go with these. I might be leaving something off, but we'll just go with these last four. You saw that. Ownership. Yeah, you saw that. You saw that. Where's 79? I give up. I give up. Maybe I didn't take a picture. But every picture tells a story, don't it? Here's the location. There's the location. Every picture tells a story, don't it? Every picture tells a story, don't it? Forrest Gump Drive? Who would want to be on Forrest Gump Drive? All right, I'm just trying to find you the ownership page. Is that it? I can't find it. I'm going to skip it if this isn't it. Oh, there it is. I finally found it. The reason I wanted to show you this, here's the ownership, top shareholders. This has changed. It's different slightly. But anyway, close enough. Marwan has 14.4%. Corey has 12.4%. Paul Woodward on the board has almost 1%. Robert Goring has almost 0.5%. And then the only capital group that shows up is High Point, and they have less, minuscule. And you, my friends, collectively have 6%, 6.1%, 8.5 million shares. My prediction is it's going to it'll do a what's it called, there's a name for it, but it'll correct. There's a name for it. I can't remember, but it's going to snap back, and I bet the stock is up on the day. right now, 62 cents. 60 bid, 62 cents ask, 327,000 shares, so it's already started its climb back. All right, let's get back to comments. Pete the Greek, opa, means something in Greek. I don't know what it means, opa. I'm going to look it up. I'm going to look up what opa means in Greek. Opa, it probably means hello. Or it means opa in Greek. Means it's an interjection, not a word with a single fixed meaning. It's kind of like mate or cheers, or it's used to express a range of emotions and situations, often related to joy, surprise, or excitement, and can also be used to indicate a stop or to acknowledge a mistake. Opa. It can be enthusiasm and encouragement. The meaning of opa is highly dependent on the context in which it's used. And it's more than a feeling. More than a feeling. All right, the stock is now bidding 61.73. So their little reindeer games didn't last for long. They didn't. I hope you guys didn't sell. I hope some of you got to buy some. But it's the same typical tricks they use. It's just not going to work here. It's just not going to work here. Unfortunately, I think, my opinion, I could be wrong. My opinion is the whatever you want to call it, the finalization of that MOU from February 11th, I would consider that good news. And since, all right, now finally Fingers earnings show up on news, it actually got released on EGDR. I should have looked that up yesterday. We can talk about Fingers earnings. I think it was another quarter of same old, which is not all bad, but it's not particularly exciting. Finger is down 2 cents, not a big deal, 186.5. GDC is down 8 cents, 334. G-Bucks is down 14 cents, 172. ZJYL is down 6 cents, 64 cents. And Railtown is now down 2 cents, a little bit higher, 61.73. All right, let's go down it. Sorry. I just wanted to come on early, sort of without a train of thought, because I didn't want you to get nervous. Nothing's wrong. I haven't heard anything wrong. It's just they're trying to shake the tree. Hey, Ryan. Yeah, I hope that's right, Ryan. I hope people took advantage of the dip. Hey, Narad. Hey, Nunya. Good to see you. Good to see you. Hey, Justin. Looked like a good buying opportunity. Yeah, Justin. That's good analysis. You're getting it. Hey, Danny. Good morning, Nunya. An interesting situation is going on with. It's always the same. These stocks. I'll look that up, but I don't want to type it in my computer. I only have 5 slots. I don't want to use them up. My numbers are wrong. All right. Danny bought some more. Excellent. I'm going to write that down. and my pen ran out of juice, so I'll use this pen. That's great, Danny. That's exactly what to do. Good man. Hey, KYP. Haven't seen you in a while. Nice to see your smiling face, and I hope your mother's doing well. You're a saint to spend time with her. You're lucky too. It's one of my weaknesses. I don't deal with my mother particularly well. What numbers do I think it'll run to? Well, it's not a quick answer, but it's, I think I still have what I did yesterday. I do. If you assume next year, 2026, they do 90 million in revenue. Now I got to that. I used everything has to be a guesstimate because that's all I've got. But I used an old video, a year old, of Corey Brandolini discussing Railtown, and the research report, which I have somewhere here, from a year ago, has a target of $2 a share. And they talk in that research report, it's from Capital Research or something like that. They talk about assuming that Railtown gets 3% of the addressable market. Now, they use an addressable market in the report of, I think, very low, of $3 billion. Corey spoke in his, and it's on the website, they talk about targeting two markets, and I forget the breakdown, the exact name. One is software something, and then the other one's software something else. Anyway, one is going to be 26 billion, the other is going to be 135 billion. That's on the website. That hasn't been updated, I don't think, for a while. But in this video, which I played a week ago, I can play it again. Maybe they'll give me some content today. He talked about the AI software market is expected to grow to 309 billion. I wrote it down. Let me see how I quoted it. Of course, I won't be able to find it right away. I showed yesterday in the UN piece, the global AI market, it's going to be 189 billion 2 years ago, and they're 10 years from then, 2033, they estimate 4.8 trillion. There's all sorts of estimates out there, but going with Corey's number, which of course I can't find as you asked me, maybe it's in my other notebook here. Yeah, here it is. He said that in 2025, the developer tools market, that's software tools, is 21 billion. But he said for 2026 that the AI solutions market, which is where they are, is going to cost corporate America, and I guess beyond that, 309 billion. So the spending on AI solutions, is how I translate that, would be $300 billion in 2026. Now, he emphasizes that spending is going to be positive results. It's going to be spending that actually benefits the corporations by performance, efficiency, growing their business with added software, In other words, it's a spending that gives back to the company. Anyway, what I did is I took that 300 billion, I multiplied it by the 3% of the report, the market penetration, and then I took 10% of that number, and then I took 10% of that number. Very arbitrary, but it left me with 2026 estimate of 90 million in revenue. Is that going to be what it is? I don't know, but you could argue that that 300 billion is too big, but I would argue that 3% market penetration for the first to market, first in class, solving a real problem, everybody wants it product is probably pretty low. So anyway, I took 90 million, which I discounted from a huge number, and then I multiplied it. You don't see it here, but I used the trailing 12 months multiples, the trailing 6 years acquisition for 90 companies at 12 times revenue. And then I used the high end of current payouts or valuations for revenue of 150x. And then I took both those out. And so I was left with the 3 in the middle. The average for the last 6 years, 25x. And then the high for the last 6 years, 50x. And then I used 100x because apparently the range being used now is 100 to 150x. So anyway, I got the median valuation of $5 billion. In this research report, they expanded the number of shares from 140 million to 170 in their calculation. So I used their number. That gave me $30 a share. Now, the key, KYP, is this is both apparently what's going on in the AI 2.0 market now, but it's also in my experience with real markets, with real price discovery, with real hustle for institutions to own stocks, professional buyers. Future numbers, once they are reasonably ascertained, get discounted, they get brought forward. We haven't ever seen that because all these companies it's just all been a nightmare. So all they have to show maybe by the end of this year is they're projecting 90 million. That's all they got to do. And I think they could have this kind of valuation. You divide it by 170, you get 30. But you could argue with me, hell no, I know you chopped it all up there, but you're being terrible. So what I did is I took that $30 and I discounted it by 2/3. So I chopped it again and I got to $10 a share. And then you could still say, you're making it all up. You're just doing it on a back of a whiteboard and you don't know what the heck you're talking about. So I cut that in half and I come up with a target of $5. Now I'm equally as comfortable, believe it or not, with the $10 number. So my answer, KYP, is that would be, I'll go to the number $30. That would be a target that I think could be achieved more quickly than what I'm going to say. But let's say a year to 18 months from now, $30. But it could happen a lot more quickly. Let me tell you why that is. Everybody, you know this up in New York, I don't know about now, but in August, they're all going to be on vacation. And Wall Street is teaching in my old office. My coworker sent me a video from the Morgan Stanley analyst on AI, particularly as it applied to robotics. But it was and I played it here a couple of times. It's a fascinating walk down for 20 minutes about how, and I might be mixing this with some other sources, but what's being put into the public consciousness and more importantly, put into the brokers is that we're in AI 2.0. AI 2.0 is real. It's been made possible by the quantum leaps in processing power by Nvidia, for example, and the data centers. So the I hate that word, compute power is gigantic compared to just a couple of years ago. So this is going to allow AI 2.0. The Morgan Stanley guy, the analyst, is talking about the first iteration of AI is about collecting all the data. The second round is going to be using it and using it real time. That's my summary of what he said. But what happened here with Railtown is the two founders, there's more than just two, but the key movers, Corey Brandolini and Marwan Haddad, met, I don't know, 6 years ago. And I think they already knew each other, but they met over a drink or a bagel or something. And they talked about an idea. Both of them have done software before, software development, run teams, created software. In Brandolini's case, he sold at least one of his companies to Microsoft. And there's a problem with software that I don't understand, but as you're developing software, you can have crises where there's a bug and it's all hands on deck and you need human beings. You got to go in and find what's wrong, fix it, rewrite the code, or everything crashes. And that also happens when things are up and running. Look at Twitter the other day. And then developing software also takes time. And then he talks about a legacy liability in software. There's a lot of software that's been out there 20 years, 30 years. And the liability that builds up is like highways. You got to maintain them, or you're not raising taxes. You're not spending it on the roads. You're just delaying fixing the bridges or roads. It's not disappearing just because you kicked it down the road. So some of the software fixes have to be made or changed, and that grows as a liability, whether they book it or not. It's something they have to address if they want to stay a successful company. So anyway, what Railtown in general has developed is, and these two guys decided to do it early, is they wanted to create an AI agent or an AI, it's not called software anymore. It's not called that, but they call it a generative agent. And they did it, and they wanted to be ahead of the game. They knew they were going to be early. So they wanted to be ready before AI 2.0 was ready. And so they spent the last 6 years, they've been in the commercial stage for about 9 months, maybe a year. But they spent the prior 5 or 6 years developing this. And they had the beta runs, and it's been battle tested. They had some customers. And then they, I don't know how much they spent, but they spent, let's say 10 million. It's probably less than that. But they now have the product ready to go. In fact, they have 4 products. One is conductor, one is rail tracks, Lang tracks, and the other is shredder, whatever that is, SREDR. And then they have a fifth thing they just announced, something that helps on the desk with a screen or something. But there'll be more things, I'm sure. But they're ready to go to market, KYP, and so they went out to market. And they started going into the commercial phase, and that got me excited because I understand that model. They have three partners that stand out. The others are good too, Omers and Mila, but they have Microsoft, Nvidia, and AMD. I've seen the model many times. I wouldn't say you know, other people's experience is more vast than mine, but I've seen it where a company creates something, spends a bunch of money, and then the bigger companies come in, buy it out. And you look at it and you go, why wouldn't the big company just do it from scratch? They're buying it out at such a huge premium. Why are they paying all that money when they're so big they could have done it on their own? They don't. It's partly self-preservation. If you've got a high-paying job at one of the giant companies, you're not going to have a failure. You lose your job. So part of it's the bureau, the employees' self-preservation. But the other thing is they have better things to do with their money and their time and their thinking, and they're in high competition and they're out doing it. They'd rather let some entrepreneurs or innovators create something, and they're more than happy to pay, and so really pay up for it. They'd rather have a certain thing than all that risk, so they'll let someone else take the risk. And what happens, that creates a value creation curve that's like a hockey stick. It's an S curve. So after you get through R&D and you get some commercial contracts and you get revenue and you prove your concept, in comes, in this case, let's say those three partners get in a bidding war. It could be Apple, it could be Tesla. Who knows what happens? Maybe they stay independent and become the phrase is unicorn. It's possible. Who knows? But the valuation's going to happen. And as you go up the curve, it's, I guess, an algorithmic ratio. But when they buy, they're willing to buy at a mathematical return, 10%, 15%, 21%. And that's good. And the person that does it looks like a genius. She gets a promotion, moves up to the board, gets extra vacation. That's how it works. So that's the first thing I saw with Railtown last year. But as they went out and they started speaking at conferences and networking, they ran into a company called AI Partners Network, or AI Partnership Corp. And AI Partnership Corp was set up by, again, a couple of founders. There's more than one, but the ones that I remember the name of, Dr. Tom Core, who was the CEO or president at Ontario Municipal Employees Retirement System, OMERS, and then a guy named John Ruffalo, who also had some relationship to OMERS, but years ago set up OMERS Venture Fund. And so he oversaw the acquisition, or the investment anyway, in a lot of high-tech companies on behalf of the Ontario Municipal Employees Retirement Fund. And so these guys set up AIP Partnership Corp, which had as its goal to bring in the best of the um, private AI companies in North America, worldwide, but mostly North America. And so they got 163 of them or something, 164. Well, they ran into Railtown at one of the conferences, and Railtown joined the network. And the whole idea of the network, two ideas. One idea of the network is collectively, they would share their clients and share their talents and cross-sell their products to the companies, but also to their end users. And so it was, a mutual interest society, but also AI Partners Corporation would roll up the best of these companies into AI partnerships. So, interestingly, this follows a model that John Ruffalo was one of the initial backers of, a company called Constellation Software, CSU. And their whole model is rolling up mature software companies using as little stock as possible. And they do hundreds a year of these. Those are mature, smaller margins, but the idea was to leave the mom and pop managers in charge. They do it on some sort of revenue sharing. I can't wait to find out. I've tried to look it up, but I can't wait to find out here. That company, CSU, it IPO'd in 2006, but its trajectory really took off a little over a decade ago. You'd have to look at the chart, but to my memory, it was around 2013. And it went from under $10 at some point. I don't know if I have the exact beginning, Canadian, and it's now $5,000 Canadian. So these guys decided, let's do that same thing, rolling up companies with AI software. I use the word software. They don't use it, but I'm not a geek. AI LLMs and AI generative products, whatever, software companies, AI technology companies. So they had 163 or 4. Railtown comes and joins in November last year. In February, all of a sudden, AI Partnerships Corp has agreed to be purchased by Railtown. Out of all those 160 some companies, they want to marry Railtown? Well, I think the reason why, it's in all the press releases, is Conductor, their product Conductor. I think it's so powerful that everybody wants it. So I think that's why they saw the reason to link up. My guess is from Railtown's perspective, the idea of being the parent company that rolls up, that gets the benefit from these roll-ups, appealed to them. The collective revenue from the 160 some companies, according to a post which I took a picture of, but I'm not going to share it because it's since been taken down, they were doing $400 million in revenue, which is another way to come up with a similar number here. I've done that live too. You figure 80% of your clients do 20% of your revenue, 90% of your clients do whatever, 15%. They're going to target, I think, and I think it's one of the reasons, I don't know this, but they announced the MOU February 11th, in a normal instance, it shouldn't have taken very long to come back and say that we're done. I think they've been taking the time to roll up the first chunk of that, the biggest chunk of that revenue. And if you just assume it's half of the 400 million, and then further you assume it's some sort of revenue split rather than stock, that could be 100 million coming in for Railtown. It comes up with a very similar number to this. All guesswork, but I think reasonable ballpark guesswork. So anyway, they decided to merge, and that was announced February 11th. I gave you one reason for the delay. Who knows? You know, attorneys are involved. Everything always gets delayed. Regulators are involved. Personally, I think the system is so permeated by criminality that some of the delay may simply be they want to make sure they give some of the shorts time to fix their problems. That's conspiratorial theory, I know, but I can't help but think that way. Anyway, it's been 5 months now, KYP, and that should have been approved within 30, 45 days by the regulators. And if it weren't going to be approved, it should have been ixnayed in 60 days or so. Well, we're 5 months later. The stock's trading up. I think the tape is telling us that there is going to be a positive conclusion to these merger talks. And I've believed for the last, 5 or 6 weeks that it could be any day now. And I'm not a sophisticated reason. It seemed like to me they'd get it done in the second quarter or the first half. Well, they didn't. And remember, lawyers don't care. Lawyers just go their own way. My experience, lawyers don't know how to get a deal done. They just know how to screw it up. But you need them so that the documents are strong and you don't violate anything. So I don't know. My guess is they're just in negotiation with enough of that revenue so they can come out of the gate telling us a strong story. Anyway, KYP, it's a little like right now the stock price, this research report here came out a year ago, and even though it doesn't say it, with a speculative buy target of $2, it doesn't say it here, but the stock was 62 cents when this came out. So people here have been buying the stock either at the same price or lower, which the opportunity, I think, has come available because of the quiet period. When they announced that they were going to do this merger 5 months ago, that automatically froze any of the big investors in Railtown, any of the big investors in AI Partnerships Corp, and there's 160 companies to the extent that those people are involved in discussions, and they're investors. And then Canaccord Genuity cannot pitch the deal to their investors, whether retail or institutional. So you're in this period where I think the news is gigantic. I mean, it's huge. Out of 160 companies, these guys out of Omers and Ruffalo, they decided to link up here. It's huge, but they can't buy. So you're not seeing any buying from the people in the know and with the money who want to be there. And the cottage industry, it's almost bigger than that industry of these criminals who come in here and they collude and all that, they have computers that read headlines. And when they saw the MOU, they said, well, it's just a memorandum, start selling. And then they saw in the body of the news, it's going to take a few weeks. Well, let's see if we can bust that trade. Let's see if we can bust up that merger. Because it happens, you've seen it, stock after stock. They start selling the price down without any stock. They just create it out of thin air because the regulators, the attorneys support criminality. And so they drive it all down, and it's going to do one or two things or both. It's going to take an agreed deal to merge and bust it. Or the deal still be on, but by the time the stock price is down, when the company comes for money, it will dilute the per share effect of the merger so massively that it really doesn't help. And there's so many examples of news and good things that got diluted on it. So they did that. The computers started selling. And I think they've actually built a short position. But KYP, I hope the hell there's not a short squeeze here. I did not ever recommend this as an idea. It's a good time to point out, nothing is financial advice. There's people out there that confuse what I'm saying with financial advice, and fair enough. I've got to make it clear. I give you my strategy. I give you my opinion. I editorialize, and maybe I educate. But I do not know anybody's personal financial situation. I have answered questions, but always in the context of what I would do. But you've got to do it yourself. You've got to think it through yourself. So nothing I say is financial advice. I also should probably say my Jennifer disclosure. I have not received anything from Railtown, and I'm not being paid by Railtown. So, I don't know why I'm doing it, but I want people to make money. I want everybody here to get out of the ditch and become their own boss man. So, where was I on that? So I think KYP, it's a unique situation. We're able to essentially buy, if you want to use this analogy, we're essentially able to buy on a pre-IPO price. Obviously, it's already publicly traded, but the price is suppressed probably by a little bit of shorting, but mainly because none of the buyers in there. Why? Because they've got to wait for the deal to be announced, and then the information is fully disclosed. And there's a possibility of a delay for shareholders meeting that we have to acknowledge. That's 40 days. But that doesn't change that when the news is announced, and I thought it would be any day, I actually thought it would be in May, but I came out pretty forcefully the first week of June. And I've been wrong. It's been 5 weeks. But I think that doesn't mean it's not going to be any day. It could be any day they close that deal. And then that unleashes, if there is demand, and I think there is, that unleashes all those buyers to come in. Now, then the question is, do they come in slowly, or certainly they'll come in stages, because some institutions can't buy under $1. Other institutions can't buy under $2, and so on and so on. I think ironically, KYP, I think if I'm correct in all this, I think the slowest movement will be from 63, 64 cents to $1.20, and then $2, and then $3, and then $4, and then $5. It'll be stair stepped up. And I think each level will become a stair. It'll become support. This isn't a stock that's going to shoot up and then disappear, and you've got to be worried, I better sell, I better get my orders in, because then it's going to come down. There is a chance of a short squeeze, which I dread, but we'll cross that later. So as it goes up, that initial move, which I've pegged at $5 in this example, but I'm willing to say that initial move will be to $6.38. Anyway, I'm willing to say 10x. That's according to me. That is the difference, if we use this analogy, of the pre-IPO price and then the IPO price, which is not a perfect analogy, because to go from 60 cents, 65 cents to 6.50, it could happen very quickly. Or it could take 6-8 weeks, take until the end of September. That could all be true. But I think if I had to stake my case, I would say it will happen very quickly, because it's going up that S curve, and the buyers are going to come in that know what they're doing, and they're going to see the value. And the key is, KYP, is the 65 cents, if I'm correct, it goes to $6.50. I've been expanded. My original goal was $3.50, and now all of a sudden I'm double that. But I can deal with it. That once it's achieved, it doesn't even have to go to that level. Once $5 is achieved, you could see the stock go to 10 or 12 just because institutions can buy. And so ironically, the first little move might be a little more hitchier, stair step, but then so the first $5 might be more of a glitchy thing, but at 5, it might go, the next $5 might literally be within hours, because the big boys can come in. Now, I was starting to tell you that Wall Street, in my opinion, is going to be ready with product to pitch to their clients, from ETFs to retirement accounts, managed money, maybe limited partnerships, closed-end funds, mutual funds, specific stocks, when everybody comes back from summer. And so I think there's going to be a wall of capital coming into the AI 2.0 space starting September, October, and certainly accelerating into November and December. So it's a perfect storm of a company that has created a model that matches Constellation Software, being purchased by a company which invented an AI generative intelligence assistant. First of its kind and best. Everybody wants it. So it's a perfect storm. They're going to merge, and then just as all this wall of capital's coming in, I see the stock easily jumping up the valuation curve 10x from here. And could I be wrong? Could it be 5x? Sure. Could it be 15x? Yeah. But anyway, and then that becomes the starting point. I don't believe it's going to sell off. I don't think it'll ever be back down here. And let's say it goes to 650. I have a hard time with the knowledge, with the expectations I can come up with now of saying there's another 10x with a good deal of confidence, because I used to say it would go to 350, it could go to 35. So I would say 5x. So if it gets to 650, I think you could see 5x over the next 18 months from there. So this stock is going to be the gift that keeps giving. And right now the price is available because they haven't unleashed the hounds of buyers waiting. I believe they're waiting until they're free to buy. And I think it's one of the most exciting opportunities, KYP, that I've seen in my now lengthening life. It's right in front of us, and I'm just using public information, by the way. It's right in front of us. What they're doing, you have to study it, you have to think it through. You got the naysayers like on Twitter and all that. You got the jump in at the last minuters, which is fine. That helps, I guess, go up. But I don't want you, KYP, to think this is hot money. I don't want you to think that if this goes from 63 cents to $6.57, say, that oh, I better take that profit. You can do whatever you want. But let's wait and see what the information is. Let's see what the final merger agreement says. Most importantly, let's see what they can talk about in terms of revenue, and then we can start making some projections. This $30 number here, it's not unreasonable. More than that, that's probably low. Of where it can go. But I'm not saying it's going to happen in a day. That could take till the end of next year. But on the other hand, it could accelerate. And you may experience for the first time in years where good news is discounted to the present because of all the institutional buying. And I don't think Railtown's going to be subject to, it's not going to be a victim of these short sellers' games very long. I would expect that there's going to come a time where this is a stock largely held by institutions. That's why I'm nervous, because there is a short squeeze potential here, which I didn't appreciate until just recently. There might be 41 million shares, 30 million shares, 40 million shares short. I hope we don't get into that, because the bad guys, they love hot money. They love us in motion. Our emotions, we'll go buy 10 cents or something, and then that'll run, and then it'll crash down. How many times have you actually made money on a squeeze? This is not a squeeze. This is a stock that'll pull us out here, and I think you've got 10x ahead of you. Question is, am I correct if it's going to be very quickly, or is it going to be stretched out? But once it happens, it's going to stick. It's not coming back down, and unless an asteroid hits. And then from that level, you could have 10x. Don't get me wrong. I'm trying to be cautious from $7 saying 5x, but there's no reason why I couldn't 10x from there. But we've got to change our mindset that we're not on the next space call listening to the next story. We're getting away from that. This is our position, and if we hold it, it gets there and it stays there. And you got to be in it early, though, because everything can happen more quickly than you expect. It may end up being KYP. This is my final part of answering your question. is this is a one decision stock. We'll have to address two items. One, there might be a short squeeze, and next year there might be a market correction. But let's just put those aside for a second. This might be a one decision stock that you buy it 18 months from now, 2 years from now, 3 years from now. One of those three partners, Nvidia, AMD, Microsoft, or somebody out there that's like Apple, who's behind in the AI space, or Google, who wants to stay ahead in it, or Intel, who wants to jumpstart their life. They could just buy the company. And I think that's the ultimate exit that's going to be here, is that a big boy will buy this. And I think institutions will be in the stock. So if we're shaken out and we try to do a dance, let's say for some reason I'm not calling for this, but I hope it doesn't happen. But if shorts get caught out and the thing goes to, I don't know, $15, do we sell? I don't think so, based on what I understand right now, but we'll have more information once they ever get this merger completed to try to suss out valuations. But the risk is, if you get out at 15, hoping to buy it back, let's say it's 7, so you put a bunch of orders in 7, it might only pull back to 12, and then it might run, and then you're not in it again. And this is a stock literally that not only could get very expensive quickly, it could be unavailable in size to retail, because as institutions buy, their horizon is professional. It's not this gambling, day trading gambling. Hey, look at the chart. It's going to run. Oh, it's a breakout. I love charts. I read charts, but I'm more of a fundamental story, more of an opportunity person. I don't like day trading. Sometimes you have to trade. Sometimes you have to do it, and the charts help you with that. But other times you just got to get in, pay the ticket, get your laundry, or whatever the saying is. Anyway, it's 63 cents bid, 63.72. So I guess KYP, I gave you a long answer. I think in the very near term, it's going to be $5 to $7. What's near term? It could be 1 week. It could be 1 month. It could be, by September 15th. But I think in the first move, I would anticipate it's going to be very rapid. And then the second move, I think is going to be rapid too. It could very quickly be $10, $11, $12, $15. And all the way up to those numbers, unless I hear something differently, I'm going to say you shouldn't sell. But you got to do what you got to. You got to do what you got to do. You got to, you got to manage your money the way you see it. I think if people can hold on to this stock for 18 months to 2.5 years, the biggest bull market. James Altucher says that the AI 2.0 bull market is going to be bigger than crypto. It's going to make crypto look like a ripple in the water. And I think the biggest bull market in it is over the next 18, by the end of next year. And that's just money flows. But I'm making a prediction, by the way. I think Wall Street is training its sales forces to raise money for AI 2.0. That's my theory. And I believe it. You see it. And people understand it. They don't understand oil and gas, but they understand that. And when will that money be raised? I think third quarter this year, fourth quarter, first quarter next year. second quarter next year. It's going to be a big focus. And so that money, that wall of money has to go somewhere. So I think there's a bull market in AI 2.0, at least for a year, 18 months. The crosswind could be a market correction, but we'll talk about that later. In that context, that's why I think this stock gives you 10x, 20x. Heck, it could be, 50x if you wait. And the stock could get bought out much higher. So anyway, I would say let's just pick a number, $5 to $7 by the week of Labor Day, and then I'll say $15 by the end of the year, and by next summer / end of next year, I'd say 30 to, let's keep it light, $30 to $40 by the end of the summer or by the end of next year. $30 to $40. It could be higher than that. It could be significantly higher. But the key is, KYP, it's not hot money. You're going to have to wait. We have to change our electricity in our brains. There'll be corrections. Nothing goes straight up. But once it's there, you're going to have an account that has that value for a long time. With the backdrop, if we have a big correction in the market, there could be 9 months of being uncomfortable. But I think AI 2.0 will be one of those industries that they rotate leadership into, which is ironic because some of the leadership in this stock market are companies that are highly benefiting from AI 2.0, like Nvidia. All right, I went on too long. So where do I think it'll run to? I think 5 to 7 short term, 10 to 15 intermediate term, 30 to 40 a year and a half. Those are my targets. And I don't think you should sell. You can trade if you feel good at trading, but I don't think you should sell. All right, I'm moving on. I hope your mother's all right. We'll say a prayer for her. Hey, Michael, got to get that. Michael Lonsky. President Trump drafts letter to fire Federal Reserve Board Chairman Powell. I don't think Powell's done a bad job, frankly. But so this is what's ahead. This is why the big, beautiful bubble is going to get bigger. The big, beautiful bubble will be bigger. The bigger, beautiful bubble. Just pump more money, pump more money, pump more money. Money magnet, we are at war. The United States of America is at war. It's on behalf primarily of AIPAC, Israel, I think to a lesser extent Christian Zionists, but you have to understand Christian Zionists are there. But we're going to war for all of the, nothing's ever one reason, but we're going to war for all of 100 to 150 years of pain suffered by Jews at the hands of Russia, the Tsars and the Cossacks, and then at the hands of Germany. And of course, the United States was silent, like we're currently silent with Palestine. The United States was silent early on, although FDR opened up the door. He said, come on in. But the Zionists had a different idea. Let's go establish a European colonial base in the Middle East in the British Mandate. Let's be colonial. We're white, we're European, and let's be superior, and let's go do, what the British did around the world, what the Americans did to the Indians, what the Australians did to the natives. And let's just go do it. Let's go do it in the Middle East. And so for 100 years, and particularly with this president, this war criminal, Benjamin Netanyahu, can bring his dry cleaning to the White House, and he convinced the president not only to join an unprovoked attack against Iran, destabilizing the region, but get the United States to support Israel's inability to be a good neighbor with any of its neighbors. Any of them. But it's not Israel's fault. It's the neighbor's fault. Every single country? Poor Israel. And then they're killing children on a massive scale, and we do nothing. Anyway, Netanyahu gets us in there into the Middle East, and we're at war now with Iran. Iran's never going to trust us. And then somehow he comes here and he gets President Trump to agree to send offensive missiles so that this pipsqueak, Zelensky, mental pipsqueak, can attack St. Petersburg and Moscow. I mean, this is unbelievable. But so it's revenge for years of pogroms and worse. But it's also, and I think this is both, some people would argue that the banks and the financial system have grown to have a large Jewish component and a very Zionist component. But I think it's also perhaps the British banking system, which, maybe it's all mixed together. But I think it's the British New York banking system for hundreds of years has grown based on empire and increasing capital, and then basically getting populations to buy into that banking system, and it benefits the very top, the rest constantly in debt. And debt is slavery. Anyway, I think the wars are really bankers' wars. They're really about going and finding more collateral. And I don't know what they can do. Break up Iran. I don't think we can win in Iran. But China's built rail to Iran so they can ship oil to China. We want to disrupt that. And then it's about the $100 trillion worth of natural resources that Russia has. We want it. We want to break it up. We don't have to control it. We just have to break up. We have to have regime change, have it all break up so our banksters can go in and lend the money to BlackRock, can go in and finance reconstruction and build out new. Look what it did under Yeltsin. A handful of oligarchs bought. Yeltsin said, we're going to give private ownership. We're going to give ownership to the people. Handful of oligarchs came in and exchanged cash for next to nothing, bought up all the shares, and they took over Russia, and they were backed by the banks. And Putin came in and said, hell no, these assets belong to Russia. But if the banks, just like with your house, if the bank gets you to sign a mortgage and you have some stress, you lose your house. And that's what the banks, that's my opinion. We're going to war slowly at first and then suddenly, and it's on behalf of the banks. It's on behalf of the banks. And it's Netanyahu who's going to get us in it, because Trump is surrounded. Everyone says he's an anti-Semite. His son-in-law wants to redevelop Gaza Strip. Of course, you got to get rid of 2.5 million people any way you can. And it's going to be the eternal shame of the United States. It's the eternal shame of the United States. And this Epstein thing doesn't help. I think Trump's going to lose the midterms. So we're going to have AOC, which will be a swell. You think America's screwed up now. Wait till you have AOC. Anyway, I went down the alleyway there. But anyway, Money Magnet, I don't think Jerome Powell did a particularly bad job. Our banking system is set up. The debt has to keep growing. It's just a big argument they have. It's like a shark swimming or a relationship. It just has to keep going forward or it dies. And so the ever expanding debt, it's come down into what I think is fractional reserve security system. But it's all, I hate this word, everything's levered up. And they need more collateral to keep the debt expanding, to keep the whole thing going for a handful of white men. But in that case, we can't talk about it. Oh, you can't notice that. But in every other area, society can turn against men, but not in the ultra wealthy. Oh, no, not in the banksters. Can't be upset with that. No one gets upset that no one notices that everything gets siphoned off to white men. But you can't talk about it. All right, let's move on. I've got to change my time frame, my brain. Hey, D-Mac. From earnings, finger warrants were exercised. 837 were exercised and 50,000 more. That's why they ran it up and crushed it. Yeah, I told you it's the toad. The toad did, in my opinion, the toad did 90% of that offering. And let me see if I can find the picture of the toad. The toad did 90% of that offering. Moez Kassam, Anson Funds. Yeah. But that's not, how many warrants did they issue? Wasn't it 7 and 3? That's not all the warrants out there. I can't remember now. It just seems like part of it. Yeah, that was an expensive financing, and it was toxic for Finger. Let's see how Finger's doing today. It's hanging in there. It's down 3 cents, 185. I don't know if it's broken the 200-day moving average. Let me look. Someday I've got to get a chart here that I can get a computer. I can show you the charts. Yeah, it's breaking the 200-day moving average, and it's below, on my small screen. You should ask somebody like Lion or I don't think it's quite broken support, so it could be okay. I would say you could argue support is 180. It'll depend on where it closes today or tomorrow if it has a reversal, but it is breaking below the 200-day moving average, which wouldn't excite me making a new commitment. But I have heard that, you have a very strong cadre of investors and management at Finger. So I've heard they're working on making something happen. I have no idea what. But let me see how the money flow is going. It's not bad yet, but if it crosses down, if it turns negative, that'll happen in the next day or two. So you have to hope that it's seeking a bottom, but AX1, I'm not. It's got to be a coin toss right now, and you're hoping that there's going to be some big action or event, and that's possible. Remember, they're in there with, or they were with Univest, that whole group of people, and just because they broke up their financing arrangement doesn't mean they don't talk. And Univest supported quite a few of those stocks that had sudden runs. So it's always possible, but it's a bit of it's a bit more gambling. It does say hard to borrow on it, so you still have that. When you pull a rubber band, you still have the chance that it snaps back. We can talk about Fingers. We can talk about Fingers earnings once I get down to the bottom of these comments. I got off on a riff. I'm sorry about that. But we are at war. It's important for everybody to know that. I think it'll be good for the markets for a while because it means borrowing money, putting monies into the market. But I do think that the North American experience of the last 150 years, but certainly of the post-war years, is about to come to an end. And we'll still have good lives, but we have to prepare for it. It's just how it is. We can blame people, but we're just going to go experience it. There's a power vacuum in the world. No one trusts Trump. No one trusts Trump. And no one trusts the United States after Biden, and the neocons, and Hillary, and Obama. American word is meaningless, and we're run by a bunch of fanatical warmongers. It's insanity. When did the Democratic Party turn into a war party? I have a feeling I know when. When Israel needed a big oaf to come get them out of the fights they pick. But it's just what's happening. You can't change it. Pray about it, but can't change it. So it makes it all more important what I've kind of tried to get you to think about is becoming your own central bank, becoming your own financial island of strength. And I believe Railtown will pull us, will not only be able to get your accounts green, but you got to own enough of it for that to happen. But even a relatively small amount of Railtown could be worth a lot of money over the next 2 or 3 years. But it has the chance to pull us out of these endless lessons we've learned, and we keep turning back as if it's going to be different again. Every single one, from AMC to GME to MMTLP, MMAT, COSM, MULN, CNLV, Clear Vision, Logic, GTI, all of them. We go in and it's how they're going to put this together, and there's the whales and the short, and it's going to, and then even if there is a squeeze, we're so addicted to the idea that it's going to be so much bigger, we're afraid to sell, and then the pros are selling. They figure, hey, if it goes to the moon, I've already made a nice profit. I'll let somebody else have it. And guess what? If we had done that 10 times in a row, we would be better off. We don't know when to sell. So we get all focused, oh, I want to get in that. It's going to go it's going to run. But we got to be honest with ourselves. We don't know when to sell. We don't know when. We don't even have a clue. And if our emotions are running, oh, this is going to be it, this is my ticket, we don't sell. And the pros come in, they always have a trick or 2 or 3 or 5, and they got the whole system on their side. And they got the toad. It's just endless. And we've spent as much time in this ditch as a presidency. We've spent almost as much time as the Soviets used to have 5-year plans. We've spent almost as much time in this ditch to get a college education, to become a PhD, to take a fallow farm and rotate crops and invigorate the soil. We could have done that in the last 4 years. You could have had a child that went from screaming and pooping in her diaper and crying and all that to being a great 4 or 5-year-old now. Instead, we keep going back and saying, oh, this is going to be different. Yeah, this is going to do it. These guys need me to come buy the stocks up, just like Axe 1 just pointed out. The toad needed the stock of Finger to go up so he could exercise his warrants. I think it was more than that. I think he was trying to set up a situation where he could have done a financing with the company, and assuming the financing would be similar to the last one, I almost think Finger should have done it at higher prices. But anyway, we can talk about their earnings after I go down through. Hey, Donna, you bought more. This is awesome. Oh, Donna. Wow, 1,192. I'm sorry, KYP. That's great, Donna. KYP, I'm sorry it took so long. But I told you, it's not a short answer. Hey, Benjamin, Northeast Iowa. All right, I'm writing that down. Northeast Iowa. is Northeast where, what's the city in Iowa? Duluth? Boise? I've never been to Iowa. Hello, William. Everyone be patient. They're trying to shake. Yeah, I agree with you. I believe they're throwing everything at us. I agree. Everything at us except the kitchen sink. Good buying opportunity. Good buying appointment. Bought another 5,000. Awesome. Awesome. Good job. A to Z. Alpha to Omega. Yeah, they've got it. What's the volume? 426,000, 620, 62.69 to 63.66. And that, of course, the ask keeps moving around. That's where they're spoofing. And you know, what's this idiot at the over-the-counter's name? Big shite-eating grin on his face. OTC markets. The official site. The official site of the OTC markets should be Lorton. It's a joke. Okay. I can't contact market hours, careers. They don't want you to see their team. Okay. CEO OTC markets. There he is, R. Cromwell Coulson. R. Cromwell Coulson. OTC Markets CEO on making going public popular again. What the hell? What's he smoking? Thousands of small public companies get their start. It's like that scene in Josie Wales. Senator, you told me these men were going to be well treated. They were well treated. They were well fed, and they were well shot. He has a blog, Cromwell Coulson. How does OTC Markets make its money? Let its CEO explain. They collude. They provide the critical market infrastructure so that our CEOs and shareholders can be destroyed. The entire market caps can be stolen, and we've got the shit-eating grins on our face. He looks like a deer in the headlights. What an idiot. What an idiot. Cromwell Coulson. All right. Jason Harbison. William, I think a deep dive into Windsurf AI, 2.45 billion IP license and key personnel deal that just closed with Google. All right, Jason, I like your thinking. I'm going to write that down. We'll look it up. Windsurf AI 2.4 B IP license. I like this. Jason, I like this. Thank you. We'll look it up. and key personnel's for assholes. What's intriguing to me, I don't know if Windsurf's public or not. I don't know how many shares they have. But 2.5 billion, let's just make that non sequitur. Let's say if Railtown were purchased for 2.4 billion, I don't think they would do it, because I'm going to say it's too low a price. But let's see, with 150 million, I'll expand the shares. 150 million shares, $16, Jason. I don't think they do that deal, but that's very interesting. I'm going to look it up today, now, but I'm going to go down these because I've been so slowpoke. Hey, Lawrence Bree, scared money doesn't make money. I like that. Scared money doesn't make money. On the other hand, gambling money doesn't make money. And I've known some fearless gamblers. I love how it's already bounced back from that attempt to escare people. Exactly. Look at that. It's last trade 62.69, so that's the bid, but the ask is 63.68, which is essentially the previous close. So they did all that. They just made their short position worse. I hate talking about the shorts. But you're right. It didn't work. Lewis says, although I sold on my G-Bucks where my dividend. I told you, I called in, I think I did it live. I called into Morgan Stanley, who owns E-Trade. And I asked, hey, I'd like to sell my GTII. I filled out all the paperwork a year ago. I've been waiting. Can I sell it? And they, of course, called me back. And they said, well, sir, this stock is a non-reporting stock, so it doesn't qualify for our, you don't qualify for our 144 program. I said, what the hell is 144 program? It's a right. Well, you can always transfer your account or transfer the shares. They'll come up with any way, Lewis, not to get caught out. And part of it's legal. Part of it's legal. Companies are waiting for Trump to fire Powell and decrease interest rates. Well, true. The problem that Trump doesn't understand, I don't think, but he might. I think Powell was a bit of a jerk. He's very political. He's saying that tariffs are going to cause the trouble. And by the way, that's what they'll blame it on. We are going to war. It's the neocons, however you define them. But it'll get what comes, the crash that comes will be blamed on Trump and maybe his tariffs. But it's not what's going on. And in fact, Trump might be able to kick everything down the road until AOC's president. We'll find out. I mean, nothing goes exactly the way it did, but so far, enough time has gone by in human experience that it seems like we're imitating Germany, although we're the international currency, so it's not a perfect match. We might just be imitating ourselves 100 years ago. But anyway, what's missing in the thinking, I believe, of Trump and his advisors, and this is what I think Powell was doing well, is the bond market. The Fed doesn't control the bond market. The Fed controls overnight rates, and it controls. The Fed can be like the Bank of Japan or like themselves, I guess, but they can buy assets or sell assets for their own account. And that can have an impact in the market, particularly when no one else is there. But the bond market is gigantic. And the world, I think it started under George W. Bush. It accelerated with the complete incompetence of Hillary Clinton and the non-event of Barack Obama, and first Trump. I actually think that was a lull for the good, and then Biden, complete nightmare. Now I think for two reasons, one reason only, Trump is hitching his star to Benjamin Netanyahu. And as much as he says that Ukraine is Biden's war, it's Trump's war now. Iran was Israel's war. It's Trump's war now. And there's no backing down from either one. The long-term consequences. So anyway, in that world, there's no leadership. And our leadership, both moral, maybe ideals, military and financial, have allowed our government bond market and our equity markets to reign supreme. And it's given the Fed, particularly when we've connected the main suppliers of oil in the world to the dollar, it's given us quite a bit of, as the French called it, exorbitant privilege. It's given us a nice lifestyle. That's about the end. Doesn't mean we're going to go broke. It's just we're not going to have that anymore. And the BRICS nations are really accelerating their move away from the United States. I was hopeful that Donald Trump could renew American standing, but he's going to go down with Israel. We got 8 million people in Israel who are maniacally murderous. 70% of them support shooting children in Gaza because they're going to grow up to be terrorists. This is an unhealthy cult. It's no different than what happened in Germany, but we're going to support it. So we're going to be on the wrong side of the world and history. And we're crazy if we think with the modern advancements that we can't be replaced. We can be. That's what this war is going to be about. It's going to be about disrupting that. And I think the world, the BRICS, would trust Putin more than the United States. I think China's got a leadership vacuum itself, but that can be resolved fairly quickly. But all you need is someone that essentially tells the truth, and a commitment to American ideals, because we're founded on the ideals that the whole world wants, but we don't do it anymore. We're turning into Israel. Make Israel great again. And Israel's not a democracy, and it's not a good place. it's a they censor what you say. There are honest people. They're very smart, and there's some good newspapers. But anyway, so in all of that, CB, the problem that Trump has, if we lower interest rates too much, people might abandon the dollar and abandon our bond markets. Bond markets could start trading separately from the dollar, from the Fed. And that's what Powell was concerned about. Of course, he blamed it on tariffs. But we need the Saudis and the Emiratis to continue to sell oil in dollars exclusively. But that's about to go away. I think Soviet weaponry, Iranian weaponry worked better than American in the Middle East, although I'm sure we have better. So how much calculus does it take to the new king in Saudi Arabia, the soon-to-be king, to say, you know what, we better hedge our bets with Russian weapons. We better hedge our bets with Chinese weapons. Maybe we should get closer to India because they've got expendable troops. Maybe we should make friends with Turkey and Egypt. The point is, our strength, so everything's circular. Our strength is that the dollar is what oil's priced in. Oil's priced in because an arrangement we have that we're going to protect, to keep it simple, the Saudi royal family. And if we can't do that, things start falling down. And if they can't trust the word, I mean, the president said, you got 2 weeks, and he bombed anyway. And then Netanyahu starts an unprovoked war, and the president's telling him he's a war hero. I mean, I'm disappointed in that. And there's no leadership coming. The United States has to fall. We're going to have AOC. I think the only hope is if RFK can run and win, but the Democrats won't have that. The women hate him. And this country is feminine now. The powerful vote is female. The buying power in this country is female. Wealth, the majority of wealth is female. The education is female. The family courts are female. It's a huge experiment. I'm sure it's gonna work out well. Justin, I don't remember exactly, but I think there was one sentence in a press release where RAIL referenced themselves and AI Partners as the same company. They are. I mean, I don't think that deal's going to fall apart. Why, Justin? If the regulators were going to kill that deal, they should have done it 3 months ago. So I don't think it's a regulatory problem. If the shareholders were going to bust it up, we should have known about it. But my understanding is the close, sort of aligned inside group, including founders, is about 53%. If we get a chance to vote, we're 6%. I'm sure we'll join in. I don't see the vote to get this deal done as, I think it's just going to be a done deal if they can ever get the final agreement accomplished. And I can only imagine the amount of attorneys. Oh, we've got a 621 problem. Well, no, I think it's a 433 problem. And let's go through the pages. On page 10, there's a the where I think there should be a the, and there's a it where I think it should say its. And why don't we scratch out the whole uh, uh, section 7.5? Let's take point 5 out. Well, we need that in there. No, why don't we? Oh, I can just imagine. Pete the Greek. The sudden drop concerned me. I didn't want to see bullions moving like that. Yeah, Pete, that's why I came on early, and that's you guys are paying the price for it because I'm rambling. But yeah, I figured people would be scared, but that's what they want. They want you to be scared. And when you're scared, you sell. When you're greedy, you buy. That's all they want. They want you thinking with emotions. They want your money hot. And I think Railtown is the one thing that is going to pull us out of here. And we don't go back to this. We just don't go back. I mean, you can, but I think it's a gambling addiction or a drug addiction or a victim addiction. It's just not the place to be, particularly when you're an adult. All this is just, and the thing is, they need us. That's why they come, and they'll come. They'll come here when we have a win. They need. What happens, Pete, is 90% of all trading is by computer. There may be some people that trade individually, but like me, I go in here and with my puny account now, and I trade, but it effectively becomes a computerized trade. They meet in the middle. There's no market makers. There's nobody standing in against the tide, and there's no enforcement of what we've come to call counterfeiting. But the problem is counterfeiting is legal. If you find a stock loan desk that'll give you the shares, and if you're a big enough client, they will. And if you have attorneys that'll lie for you, they will. And if you get one of these toxic financings in, they'll cover for that, even though it's illegal to sell based on that, because that's 6 months down the road. Or you get a derivative in there, the stock loan desk sees that derivative and they lend you the stock anyway. And then the attorney will take that convertible note to another prime broker and another, and then you set up a lot of different LLCs, and you're not supposed to, but you nod and you wink, and it's all collusion. It's just endless, and it can be fixed, but there's no resolve to fix it. Cromwell Carlson doesn't care about it. That's why he makes huge money every year. Adina Friedman makes she makes $100,000 a month. No, $200,000 a month. No, I'm sorry. She makes $2.5 million a month. I think she makes $25 million a year. I mean, whatever. She's way overpaid. Way overpaid. If you gave her the minimum wage, she'd be way overpaid. But so Pete, what they do when no one's looking, they put out. I showed you that little. I don't think it was a hit piece, but if you didn't open it up and really look at it, what you noticed is Railtown's got 90,000 in assets, and I'm sure if you go find Tony the Twit, go read him on. I don't read him, but if you go read him, I'm sure he's focusing in on all that. So you try to create a panic, then you come down and you hit the limit orders to sell, and then you're selling stock that doesn't own. Some of the guys were able to cover make quick profits. It's all illegal, but they're good clients. And the brokerage firms and the prime brokers and the so-called market makers, they're starved for business. They look the other way. And Cromwell, Chuck E. Cheese, whatever his hell name is, hellish name, he doesn't care. He just doesn't care. So let me try to make a positive point there, Pete. Railtown is not one of those stocks. They're trying to do it. And I don't, our muscle energy, our memory, muscle memory is it always works because it's always worked in every other stock. It's not going to work here. It's not going to work here. My own opinion is that the system is so rigged. We follow the rules. I'm sure the CEOs follow the rules. I'm sure the lawyers for the company follow the rules. But somewhere in there, whatever's going on is probably being relayed to I don't think the toad is in there, the toadster, but people like the toad, whoever is selling this that doesn't exist. I mean, there's apparently 45 million shares, US only, that have been sold that don't exist. A good part of that, even though it's illegal, you're not supposed to sell something you don't own until you've located it, but you can net it out at the end of the day. Everyone looks the other way. Or if if the stock loan desk gives it to you, they'll look the other way on that too. What's in your account because of Bill Clinton are claims on a pool of stock. What's in your account isn't shares of stock. And that's all because in 1994, they changed the UCC Section 8 Act for that. So part of it's legal. And so it's endless. The only way to make money is get the hell out of it. So here's a very grown-up person. This is a really grown-up person here. Let's let him have his day. Before you have really sticked 8 other stocks up my rear end. Well done. Thank you, William. Well, I guess you have to live with yourself. It must be a hell of an experience being you, both stupid and completely unpleasant and a bully. Hell of a life. Hell of a life. But I think your summary of my rolling finger is wrong. And you said 8 other stickers. Name them. I didn't tell you AMC, GME. I didn't tell you Finger. I didn't tell you GTII. I did. As I've said, I bought into the thesis that early on that there could be squeezes. It's been a long time since I believe there's any squeeze. I think you guys have it all angles locked up. I would say that I put as a recommendation, an idea, not financial advice. I'd say that logic, I have to take the fall for that one. I never recommended CRTD to anybody. I was in those though. I was in those, and I did charts on them, which didn't early on, which I kind of find ridiculous now. But I didn't do them because I was making it up. I thought there, I studied a lot of short squeezes, and I thought they could do it, and I think they were. But you guys came in, particularly with Finger and GT, you kneecapped it. You hired three guys. One of them's dead. One of them's out there telling me to keep his name out of my effing mouth, and the other one was the CEO. And if you go through COSM's news for the last 3 years, 2.5 years, it's glowing, but everyone got wiped out. And so it's the same circle jerk you guys do. And then you come in here and you blame me. It's you. It's you guys are doing it. Just to be clear, I do not think there's any price discovery, there's any rule enforcement in the over-the-counter markets. And I think people are crazy to keep chasing it. I mean, some of it might work, but you guys have endless tools. And so your final one is to come ridicule me. Well, whatever. But I didn't do 8. You're not stuck with them. You're not stuck with them. You're the shorter. You got paid very well. Where you're stuck is in Railtown, and I'm not. I don't feel any sympathy for you. It's going to be a black eye, but of course, as long as you get the right attorneys and the right lobbyists on your side, you'll live to kill another few companies, but you're going to lose while your finger is up it, you're going to lose your rear end in Railtown. If you need your finger, take it out first, because you are going to lose your rear end. Hey, John Clay Schofield. Wow, good for you. Good for you, Clay. Good for you. That's fantastic. That's the kind of amount that can get your account out of the red and into the green. And it's going to come from his buddies. It's going to come from his buddies. Please ignore idiots with idiotic usernames. Save yours. I don't think Flying Bus Driver is an idiotic name. It's a pretty good name, actually. I remember when we used to fly overseas, we'd have to dress up. But you're right, now airlines are like being on a bus. I don't know. I don't know. Stay there. Help them. No need to come back. I don't know. You guys, I think you guys, you have all sorts of styles. Some come in as friends. Some come in indignant that I said something wrong. Some come in like you do with just great hatred. But it's all about turning the audience into hot money, emotional money. And, I'm not, it's a free world. I mean, I grew up with people, friends. who used drugs or drank more than I did, or uh, you know, gambled, or we're all human. We all have our uh, dangerous foibles, and I don't judge it in the sense that I can't judge a human being, but I can get when it threatens, particularly my friends, when it threatens others, I can get upset about it. I think the behavior is completely wrong, but it ends up hurting you all more than it hurts. Well, I think for the last 3-4 years, you've had your fun. You've taken a lot of money out of this audience because you don't have your own audience. You're just a taker, not a. You're just world. You're no different than a parasite or. But anyway, this time it's going to hurt you, and I guess you don't have any other response than to. There's a lot of people that don't listen to me, haven't listened to me. They're upset with me. I, I'm not. I don't necessarily like that, but I'm not here trying to build up. I don't know. I'm just. What I feel right now is Railtown is the only stock. And Railtown gets us all out of this hellish experience. And if you want to get away from it, if you want to get away from the pimps and and the the, the drugs and the bad days after and the withdrawals and the guys banging on your door when you lose the bets and the bad girls showing up after you made bad decisions when you were drinking, you can go ahead. But I want to get out of all this. I want to win here, and I don't think the win is hot money. The win could take 3 years. It could take 2.5 years, but it could also be in 9 months. I don't know. But the thing is, once it occurs here, it's going to stay here. There will be fluctuations, but you guys won't have any impact on it anymore. And then we can collectively, if we're all still together, we can start making rational decisions. We are real investors, but our flaw is doing business in a world where you've captured the cops, the reporters, and the attorneys, the people that create the contracts, and the banks. You've captured it all. And we actually think we're going to win. And then after you destroy it, you come and pretend you lost money, and you call me appreciate your input. I know you were. I know you were. I was kind of saying, I like Flying Bus Driver. I like that name. On the other side of the coin, thank you, Mr. William, for your time and effort and insight. The dip today. Wow. All right. All right. I'm writing it down. 57,895. That's one thing going through all this learning process. 2 years ago, people would have sold. I'm so proud of you guys that you actually added to it. And it's 140. The volume is 529,000. Most of it's fake. And I was trying to explain to KYP using the analogy of an initial public offering. obviously it's a public company, but AI Partners isn't. But we're getting, if we can use that analogy, we're getting a pre-IPO price. We're getting a venture capital round price. We're getting a angel round price. And when it does IPO, IPOs come out at gigantic valuations if they're in an exciting area and in demand. And so when this IPOs, what I mean by that, the initial part of the IPO will be the putting it on the calendar, which is announcing the deal is done, and then we find out if there's a requirement for a shareholder vote or there's a requirement for anything. But it'll be on the calendar, and then the prospectus goes around. There's a little bit of a write-up that comes across everybody's desk. You start making the preparatory calls, and then there's the you put in your indications of interest. Then there's the allocation of shares. Then you call the clients and say you got this much. You firm up the orders, and then it's priced. And if it's like, I don't remember them. I remember stocks like Snapple opened up $120 or something like that. But then it suddenly is priced, starts trading, and it can rally or it can be sold down. It depends. But here, what I mean by IPO is we'll have the news story whenever. Doesn't look like it's going to be this week. Then I think there will be a little bit of a slow poke as the stock needs to get to $1. So there will be some institutions, maybe, like upstart funds that can come in at $1. Maybe some of the whales come in. But when it gets to $2, it becomes marginable. You might see a lot of other buying come in. And when it gets to 3, 4, same thing. But then 5, oh my gosh, I think that's when these guys are going to have a hard time. But I don't think we need to trade this. And they're trying to make us trade. I think pullbacks are a chance to buy. That's great. Flying bus driver. All right, let me see. Let me see what the prices are doing. Everything's red, including Railtown. So I guess today must be an opportunity just to make everything look bad. Yeah, I'm not going to read them. They're all down. So I'll tell you Railtown, but I'm not going to read the others. I don't want to be negative. So Railtown is down a penny and a half, 0.621 to 0.6329. Volume is 529,000. Trump sparks market chouse, denies CBS reports of imminent firing of knucklehead Powell. What's Tomorrowland? It's on fire, whatever it is. Rates are going up. Maximum generation alert declared on America's largest power grid. You guys don't get upset that we spend trillions of dollars on Israeli wars and we have a power grid that's going to collapse while you need air conditioning? Oh, you're anti-Semitic. All right, Pentagon awards contracts to 4 artificial intelligence developers. Let's look at that article. This is from the Epoch Times. The U.S. Department of Defense announced on July 14 that it has awarded contracts to 4 United States-based artificial intelligence AI developers, no Canucks, to address national security needs. Anthropic, Google, OpenAI, and xAI will each receive a contracting award with a ceiling of $200 million. So these companies would develop agentic AI workflows across a variety of mission areas. There's no reason that those companies wouldn't then go and get the best software AI developer assistant on the planet. Railtown Conductor. So a Google or an Anthropic, OpenAI. Agentic AI refers to systems designed to operate with minimal human input. This is good news for Railtown. So it's agentic, Anthropic, OpenAI. So Google is going to give the military access to its cloud tensor processing units, which power Google's current AI application. So it's those big things that allow AI. These advanced AI solutions will enable the DoD to effectively address defense challenges and scale the adoption of agentic AI across enterprise systems to drive innovation and efficiency with agile, proven technology. Well, there's nothing more agile or proven than Railtown. Trump clarifies no long-range missiles to Ukraine. He says I'm on nobody's side. Okay. Bank of America misses. Look out for Bank of America if silver were to squeeze. I think that company's in trouble. Renault is losing money. China exports rare earths. Welcome to the land of the free, unless you express an opinion. This is an interesting article. Unfortunately, we can't, this is on oil price, we can't focus on it now, but we will focus on it. Global oil consumption reached an all-time high in 2024, driven primarily by non-OECD countries, with the United States remaining the largest consumer. The United States continues to lead the world in total oil production. Remember, though, a lot of that production is natural gas expressed in oil equivalents, contributing to record global output. Declining production. 2025 statistical reviews review key shifts, including declining production in Russia and Saudi Arabia. Surging demand in India, of course. That's the most populous country on the planet, and they want clean water, clean toilets, air conditioning, miniature automobiles and trucks. And there's Guyana is increasing its production. So marry a Guyanan. Meaningful shifts underway. These shifts reflect not only changing geopolitics and economic recovery patterns, but also longer-term questions about energy security, investment priorities, and the uneven global evolution toward decarbonization. In 2024, global oil consumption, which excludes biofuels, but includes coal and natural gas derivatives, reached 101.8 million barrels today. My opinion is they keep that number that high because of natural gas. I think the oil decline rates have kicked in. I'd like to get some charts and study that. But 101 million barrels a day, that's where we've been forever. Every now and then we go down to the low 90s. But it can't last with decline rates unless the population collapses. So anyway, in 2024, global oil consumption, including coal and natural gas derivatives, reached 101.8 million barrels per day. This represents an all-time high that slightly surpassed the 2023 level by less than 1%. On average, oil demand has increased by 1% per year over the last decade, driven almost entirely by non-OECD countries. And they give a chart from 1965, and demand for oil is just straight up. The United States remains the world's largest oil consumer, accounting for 18.7% of global demand. Daily consumption in the United States fell slightly, but over the past decade has increased 0.5% per year. China was the world's second largest consumer of oil, accounting for 16% of global demand. Its daily consumption fell 1.2% to 16.4 million in 2024. This decline is a marked departure from the average 4% gain per year over the past decade, which means China's oil demand may be showing signs of plateauing. I wouldn't buy that unless the population is gone. With economic growth slowing and a push toward electrification of transportation underway, some analysts speculate China may be approaching its long-term oil demand peak. Keep dreaming. Meanwhile, India's oil consumption continues to surge, jumping 3.1% year over year to 5.6 million barrels of oil. They don't have any oil. The nation's economic expansion and rising middle class continue to drive growth, putting India on track to become the third largest oil consumer globally within a few years. There's not enough oil in the world for this, at these prices anyway. On the production side, global oil and output, including natural gas liquids and other liquids, hit a record 96.9 million barrels a day. That's 1.8 million barrels more than the pre-pandemic peak. On the surface, it's a story of resilience and recovery, but the numbers reveal a more complicated picture. The United States continues to lead the world in total oil production, clocking in at 20.1 million barrels a day. I bet 40% of that's natural gas. But that headline figure includes a sizable share of natural gas liquids, byproducts like ethane and propane that aren't typically directly used as transportation fuels, but may function as refinery feedstock. Strip those out, there we go. Strip those out, and U.S. production of crude oil and condensate, true oil, getting too many, comes in at 13.2 million barrels a day. Although this was, yes, another production record, the 2% increase from 23 was less than half the 4.2% average annual gain over the previous decade. The Permian is peaking. Which could be an indication that U.S. production is close to a plateau. Russia follows in second place at 10.2 million barrels per day of crude plus condensate. That's down 3.1% from 23, largely attributable to the impact of Western sanctions, maybe. Russian exports to China and India remain robust. Saudi Arabia also saw production fall by 4.2%. Saudi Arabia was in third place in 2024 with 9.2 million barrels per day, lowest level since 2011. I'd like to see how much they consume. The drop reflects voluntary production cuts, maybe, to support prices and long-term questions about the kingdom's spare capacity. The statistical review also sheds light on global oil reserves through 2020. At that time, the world's proven oil reserves stood at 1.7 trillion. I don't believe it. Enough to sustain current production levels for 53 years. However, the distribution of those reserves remains highly uneven. I don't know how many of you are 30 years old, but do you hear that? They're not going to keep oil production at current levels. Anyway, let's not see ghosts where they might not exist. Venezuela still holds the largest proved reserves at 304 billion barrels, but much of that oil is heavy and difficult to extract. Saudi Arabia is second with 298. It's not feasible. That's just not accurate. It never goes down. It just doesn't make any sense. Followed by Iran at 158 billion. I think that's too high. The U.S., by contrast, holds 69 billion barrels. I believe that's accurate, but I don't know how much of that's recoverable. And that's probably what these other countries have, reflecting both a mature production base and a reserve classification system that tends to be conservative. A few notable trends emerged from this year's data. One, Saudi Arabia's output decline. The drop in Saudi production is significant because it's the lowest in more than a decade, but also because it signals a shift in how the kingdom may balance price stability with market share. Two, U.S. efficiency and natural gas liquids. While the U.S. continues to be the top oil producer, a growing share of that output is in the form of natural gas liquids, which are not suitable for all applications and require different refining infrastructure. This evolution has implications for refining strategy. Flat growth in global reserves. The relative lack of reserve growth, despite strong consumption, reflects investment hesitancy across much of the industry. This could pose long-term supply challenges if demand doesn't moderate. Number four, I guess, India's ascent. India's rise as a major demand center with relatively little domestic production makes it one of the most strategically important countries in the oil market. Its policy choices on storage, refining, and renewables will shape future demand dynamics. Finally, Guyana's rise. Guyana's meteoric rise from zero to over 600,000 barrels daily in just 5 years is one of the fastest production ramps in oil industry history. With reserves now estimated 11 billion barrels, Guyana is projected to reach 1 million barrels a daily soon, potentially becoming a top 5 global producer within the decade. Marry a Guyanan. So the questions are stability or strain. Oil markets in 2024 were defined by an uneasy equilibrium. On one hand, production and consumption were closely matched, with price volatility contained. On the other, factors holding that balance together, OPEC coordination, U.S. shale resilience, and subdued global demand, are subject to disruption. Looking ahead, questions. Will China's oil demand begin to decline in absolute terms? Can U.S. shale sustain output without massive reinvestment? Will geopolitical risks in the Middle East, Russia, or elsewhere upset the delicate supply and demand balance? These are strategic questions that affect global inflation, trade, and security. Final thoughts. The 2025 statistical review confirms that oil is still very much at the center of the world's global economy. No kidding. Demand is growing in the developing world. Production remains concentrated among a handful of players, and supply vulnerabilities persist. No kidding. In the coming weeks, I'll continue to unpack. What does this have to do with your suitcase? Key findings from the statistical review, including natural gas, coal, renewables, and nuclear power trends. But one thing is clear from the oil data. In a world increasingly focused on energy transition, the importance of oil economically and geopolitically hasn't gone anywhere. It's all those overeducated feminists out of the Northeast that's got the entire investment world thinking, and Biden thinking, that in 10 years we're going to stop using oil. It's just unicorn talk. It's fantasy talk. It's childhood story tales where the knight in shining armor comes in. It's not rational thinking. And that's written by Robert Rapier, if you want to find it on Oil Line. On oil price. There's one more. Look at this. I wanted to read this to you. It's by Tyler Durden yesterday. $4 trillion, Nvidia's record valuation in context. Last week saw Nvidia officially become the first company to close at a valuation of $4 trillion. They could spend 1% of that. I think it might be 0.1% of that on Railtown, and we'd be bloody rich. Anyway, so Nvidia became the first company to close at a valuation of $4 trillion on Thursday, leaving behind companies like Apple and Microsoft. I'm going to guess this is about AI 2.0, about computing power, leaving behind companies like Apple and Microsoft, who have been the trailblazers in terms of stock market records for the past few years, prior to Nvidia's meteoric rise. Having had some ups and downs along the way, Nvidia's share price is up more than 1,000% over the past 2.5 years. Ooh. Ooh. Imagine if we had just put our money in Nvidia instead of every story we heard. Of course, that's unrealistic, but we can imagine. Nvidia's share price is up more than 1,000% over the past 2.5 years. And as the AI gold rush has catapulted the chip maker powering the transition to the AI-centric future into new spheres. See, Nvidia is a big reason that Railtown is set up for a massive price move, in my judgment. The thing is, though, I'm not calling for Railtown to be a hot stock that it happens, in a squeeze. You might have to wait till next year or the year after, but is it worth it? Hell yeah. As 4 trillion is hard to grasp, Statista's Felix Richter put together a chart. I wish I could say, I'll try to download this and show it to you. I don't know if I can. Stupid thing. It's not, I can't do it. Oh, there I came. Maybe it worked. Maybe it didn't. Oh, accept all. Oh, so this article is from Statista. I see. As 4 trillion is hard to grasp, we put together a chart that adds a little perspective to that stunning number. Not only is Nvidia now worth more than Microsoft and Apple, the only other companies with a market cap above 3 trillion, but the company's market cap exceeds the combined value of Alphabet and Meta, 2 tech powerhouses in their own right. Looking further, Nvidia is worth more than Amazon, Walmart, and Costco, the world's 3 largest retailers combined. Tesla, GM, Ford, and Chrysler parent. Oh, I'm sorry. It went to another. It got interrupted by the paragraph indentation. Tesla, GM, Ford, and Chrysler parent Stellantis have a combined market cap of 1.2 trillion, while Netflix, Disney, and Comcast, some of the world's largest media conglomerates, don't even reach 1 trillion together. The same is true for Coca-Cola, McDonald's, Starbucks, and Chipotle, all global household names whose joint market cap is less than 20% of Nvidia's. All this goes to show how highly Wall Street values Nvidia's future potential. While some skeptics view the company's rise with suspicion, fearing that the AI hype is a dot-com style bubble that can burst at any time, Nvidia's bulls think that the company will be at the heart of a golden age for AI for years to come. In the end, only time will tell. No kidding. But so far, Nvidia has surprised its skeptics time and time again, growing from a market cap of $700 $150 billion in May of 2023 to $4 trillion at a breathtaking pace. So then they have a Q1, and we're not in Q. All of those stocks were down in the first quarter. So in the first quarter this year, Nvidia was down 33%, but look at how it's rallied. Apple was down 24%, Tesla down 20%, Alphabet down 19%, Microsoft down 18%, Broadcom down 15%, Amazon down 14%. So, and Salesforce was down 3%, and then they've rallied back. The 28 biggest global risks, according to the UN. You want to know them? The 28 global risks, according to the UN. I'll start at the bottom. Number 28, a space-based event, 23%, an asteroid. 27, multilateral institution collapse, political, 26%. Geoengineering disasters comes in at 26, 27%. 25, supply chain collapse, 27%, 27.8%. Coming in at 24, global economic stagnation, 28% chance. Coming in at 23, state sovereignty erosion, 28.5%. Coming in at 22, economic fragmentation, 29%. Number 21, widespread debt crises, 30%. Number 20, social cohesion collapse, 30%. Number 19, tech-driven power concentration, 31%. 18, proliferation of non-state actors, 31%. A risk, 17, AI and frontier tech, 31%. 16, weapons of mass destruction, 31%. Global financial crisis, 32%. Cyber security breakdown, number 14, 32%. Rule of law collapse, number 13, 32%. New pandemic, 12, 32%. Biorisk, number 11, biorisks, 32%. Large scale war, all right, let's start number 10. Number 10, top 10, large scale war, 32.6%. Number 9, movement of the peoples, mass movement of people, 33.2%. Number 8, natural resource shortages, 34.3%. Number 7, geopolitical tensions, 34.5%. Number 6, biodiversity decline, 34.6%. Number 5, rise in inequalities. They've been held down, 34.7%. Natural hazard risks comes in at 4%, 35%. Misinformation and disinformation comes in at 3%, 34.5%. I hope the women at NPR protect us from that. Number 2, large-scale pollution, 36%. Number 1, climate change inaction. That's according to the UN. That is according to the UN. All right, let's get back. I want to look this Windsurf AI up. I'm going to look up Windsurf AI. Let's see, the news. Cognition buys Windsurf in AI battle with Google and AI, OpenAI. So there's a couple of things here. You see the demand, but then they get in a bidding war. And so Cognition, who makes the AI coding agent Devin, acquires Windsurf.
Scott, I'll start with you with that simple question. How did all of this come together, please?
Yes, absolutely. And so I think we all, found the news found out about the news around the same time on Friday afternoon. And we were looking at this and just saying, wow, there's such a clean fit of all of these things, both in terms of kind of the products, which is Windsurf is one of the leading IDEs. Cognition builds Devin, the first AI software engineer agent. And so there's a clear offering of IDE and agent. At the same time, both of us have a very clear enterprise focus in terms of how we do business and even kind of the customers that we have, the team that we have, and so on. And it just seems like it's such a great fit.
Jeff, what I was hearing over the weekend is that some of the investors on both sides might have played a role in sort of brokering that this was a good idea. Is there some truth to that?
Actually, the way that the other deal panned out was it should have been a clean cut. So there were kind of like conversations going, but as job as interim CEO, you have to find a lot of options for the future of the company. And I think after talking to Scott, it was a done deal in my mind. It was just a perfect fit.
Scott, what's so interesting is like the conviction that Cognition had. Why were you able to move so quickly and just say, this is a great deal for us?
Yeah, absolutely. Look, I think we are in the AI code space. I think Windsurf is a very kind of different, complementary offering in the space. But naturally, we see it. We've tried the product ourselves. We've used it a lot, and it helped us just get to conviction very quickly. And Jeff and I talked, and I think especially with everything going on, it was clear that the sooner that we could get to an outcome, I think the better for the team and for the customers as well.
What role did Google or even Varun play in this, Jeff? We're trying to unpick a series of deals and chronologies that kind of happened very quickly.
I have to say that the whole Google situation was meant to be a clean cut. So everything at Windsurf was intact. The product, the IP, the go-to-market team, the marketing team, even the enterprise engineering team. And it just so happened that these are the components that Cognition was looking for. So I want to just be clear, it was structured in a way where it was a clean cut from Google.
What was the mood at Windsurf, Jeff, on Friday when the Google licensing and acqui-hire was confirmed?
Yeah, I had to do an all hands to the team, and I had to tell them the news. And I have to say that was probably the hardest day for 250 people at the company's lives. And I was immediately in action. I don't think I slept maybe 3 hours over the next 72 hours. And my only goal was to get the best solution for the company. And I think now that we're with Cognition, everything is intact. We have an amazing core engineering team with Cognition now. And we also have Windsurf, the product still. Everything is the same. And now we also have Devin. And now we have the foreground agent and the background agent. This is like an amazing combo for the company.
Scott, would you kindly go over the basics of the terms of the deal? Was this a cash or stock deal? It started Friday, and by the beginning of this week, it was done.
Yeah. What I can say is that Windsurf employees are, every single Windsurf employee has an immediate consideration as part of this deal. And then from here on out, we are all just one team. And so Windsurf employees are now part of Cognition. We're working on this together and excited to get moving.
When I first learned about Windsurf, it was in the form of Codium. And Jeff, this question to you and Varun. And then the big news was OpenAI and Windsurf. When did you kind of get the sense that wasn't going to happen? I know we're going back over history a little bit here, but actually, in a few years' time, I might look back and go, wow, that was a pretty wild series of events. So when did you look at it and say, okay, OpenAI and Windsurf's not going to happen. What happens next?
I think it was time. So OpenAI, kind of the rumors broke 3 months ago. And if you think about it, if 3 months later there's no progress, and there's still drama, a lot of it is reported in the news, I'll say. that is a pretty good signal that things are not progressing as fast as you'd like. And I remember the founders of our company were kind of like locked in a conference room for, I think, 6 weeks. And I kind of got the sense that things are probably going to shift in another direction.
Scott, I'd love to talk about technology for a moment, if that's okay. What is it that Windsurf and Cognition can do together?
Absolutely. And so Windsurf is, in one line, is an IDE that makes it so that a developer, when they're at the keyboard, can go faster and produce code faster. And Devin is an AI software engineering agent that you can delegate tasks to. And there's a lot of natural integration of how we can work together. You can imagine kicking off the agent to go do kind of a first pass at a project and then coming in and doing the finishing touches yourself with Windsurf. You can imagine using the IDE to plan, and then once you have the task sorted out, to be able to hand it off. And we're super excited because I think both of us have always been very focused on making software engineering work in the real world, and it's in the last few days, actually, at Cognition, for example, we've announced that both Goldman Sachs and Citibank have been rolling out Devin to their teams. Windsurf has been working with JP Morgan, and similarly, when we go down the customer list, when we go down the sectors, we found a lot of natural partnership.
Jeff, I got the sense from reading, but also speaking to people over the weekend, that kind of post-Google, the remainder of the Windsurf team felt a little bit left out in the cold. But on the other hand, that's a great team. Was there a moment where you kind of thought, okay, we can carry on?
Right.
Or did the
You're very
Cognition part of it just say, you know what?
I heard enough from you. You know what? You know what? You know what? You know what? All right, let's listen to this chick. Safari can't open. I don't have Instagram, so we can't listen to her. All right. I can turn it.
AI startups this year. There's a startup, Windsurf. They're an AI coding tool. They're an agentic IDE. For the last several months, OpenAI has been in talks to acquire Windsurf for $3 billion. Now, that deal recently fell through because there were disagreements with Microsoft over IP. So the deal falls through, and we all go, well, just a story in Silicon Valley. Then Google comes in, and what do? They secure a $2.4 billion licensing deal, and it also comes with talent. They are able to hire Windsurf CEO, top researchers, top personnel over into Google DeepMind. Now, this is a big deal because, one, we've started to see this deal a couple times. We saw this with Scale AI, where Meta invested $15 billion into them and grabbed the CEO. We saw this with Adept AI, where Amazon grabbed the CEO of Adept, and now he was like the AGI group, okay? But that also meant that all these employees that had worked their asses off, that had put in blood, sweat, and tears into building up their equity and having it be worth something, all of a sudden that equity was worth nothing. The third part to this story is that after those top personnel went to Google DeepMind, only a couple days later, we get word that Cognition has decided to acquire the rest of Windsurf, the rest of the team, and all the assets. So now the interim CEO of Windsurf, who's only been in the role for a couple days, announces this alongside the Cognition CEO. We don't know how much it was for, but that is a big change for one of these top AI coding tools in just over the course of a few days, going from selling for $3 billion to getting a licensing deal for $2.4 billion, losing all your equity, and pretty much all your bosses, and then still getting acquired by another top player in the agent space. It's just unbelievable. My name's Allie Miller. I'm the #1 most followed voice in AI business, and I've been an angel investor for years, and this is definitely one of the craziest stories that I've heard.
You haven't been alive for years. Wow, that was a good summary. She did a good job summarizing it. So if I understand it, they paid a lot for licensing, and then Cognition just bought the talent. This is a sign of how hot it's going. Let's see if there's an article. She did a good summary. I like that. let me see if there's an analysis. All right, TechCrunch. That sounds like a good source. Cognition, the startup behind viral AI coding agent Devin. Now, the one thing is, if it's viral, to my understanding, that's slightly different than Railtown, because that's probably in the open AI space. It's one model. Railtown is their agentic AI, or whatever it's called, is deeper. It's not wider. In other words, it goes company by company. So it goes into a institution software and stays there. It's proprietary, it's self-learning, but it doesn't, that data doesn't go out into the open, Twitter world, the internet world. And I don't know which is the better model, but I would think corporate model that you keep the data private is a pretty good model, but I don't know. Anyway, the announcement comes just days after Google hired away Windsurf's CEO Varun Mohan, co-founder Douglas Chen, and research leaders in a $2.4 billion reverse acqui-hire that left much of the startup's 250-person team behind. That reminds me of the joke about the two Greek brothers, but I'm not going to say it. Google's deal occurred just hours after OpenAI's $3 billion offer to acquire Windsurf expired. So let's go after that again. Cognition, the startup behind AI coding agent Devin, announced that it has signed a definitive agreement to acquire AI coding startup Windsurf. So they're buying all the talent, and the announcement comes just days after Google hired away Windsurf CEO Varun Mohan and co-founder Douglas Chen and research leaders in a $2.4 billion reverse acqui-hire that left much of the startup's team behind, 250 people. Google's deal occurred just hours after the OpenAI's $3 billion offer to acquire Windsurf expired. I wonder what Google's getting. The frenzy around Windsurf. The frenzy around Windsurf represents a new peak in the wild race to develop AI coding tools. The frenzy around Windsurf represents a new peak in the wild race to develop AI coding tools, specifically the AI-powered integrated development environments. The AI-powered integrated development environments, the IDEs, that Cursor and Windsurf offer. In recent months, the business around AI-powered IDEs, integrated development environments, in recent months, the businesses around AI-powered IDEs have skyrocketed, pushing Cursor's annualized recurring revenue to $500 million. Do you see that? Annualized recurring revenue, $500 million. If Railtown did that, which I haven't read anything that precludes it, you guys are gonna stop taking my phone calls. You're gonna be so full of yourself. You're gonna be so busy. While Windsurf's business is smaller than Cursor's, it has achieved impressive growth in the last year, garnering interest from several larger companies. That's the bidding wars. And these people start behaving the way we do. Urgent, do it, Quote, it's a bull market. It's a mania. And it's real. It's not .com, .bomb. This is real. The potential here has been created by Nvidia and the data centers and other chip makers. The last 72 hours have been the wildest roller coaster ride of my career, said Jeff Wang, Windsurf's former head of business, who was made interim CEO of the startup days ago after Google hired the startup leaders. Quote, to our new teammates at Cognition, we at Windsurf feel incredibly lucky to be joining a team that shares our vision, our deep commitment to our users, and to our values. Cognition says it's acquiring Windsurf's IP and products. So what does Google get? Which includes its AI-powered IDE alongside all of the employees who were not hired by Google. So what does Google get? Cognition did not announce the price it acquired Windsurf for. However, the company says Windsurf reached an $82 million in annual recurring revenues, with enterprise ARR doubling quarter over quarter. Guys, I think this kind of excitement is coming to Railtown. When we'll find out. Is that speculation on my part? Yes, but this is the space. Cognition says Windsurf's user base reached at least 350 enterprise customers. All right, 350. We know that Railtown now has 3. Well, that doesn't sound like much. Can you imagine, though, the network of 165? They're going to buy some of those companies, I'm sure, but then they'll have enterprise agreements with the rest of them. And in all likelihood, it says in the press releases, they're going to cross-sell. And the thing that excites everybody is the product conductor. And then they haven't even gotten out and marketed because they've been tied down by this. But imagine if they start marketing. And anyway, so Windsurf's user base reached at least 350 enterprise customers and hundreds of thousands of daily activity users. But what did Google buy? In the near term, Windsurf's team will continue working on its AI-powered IDE, while Cognition works on its AI coding agent, Devin. The company said in a press release, this is not my expertise at all, but they're working on their AI coding agent, Devin. Railtown's already completed the work, although I assume the work is always ongoing. But Railtown's product is battle tested, ready to launch. It has been launched. They're just tied up in this merger, which was announced February 11th. And you can see why, when I read this, you can see why I wanted people to be in this earlier, but certainly from the beginning of June, because things happen so quickly. It hasn't yet, I will admit that. With Railtown, it hasn't quite crossed that threshold of finishing that deal. But those guys must be reading this and saying, we got to get going. We got to combine, go get our customers, create our value, and maybe sell. Guys, it's going to be incredible. Anyway, TechCrunch reported in April that Windsurf's annual or average recurring revenue had reached $100 million at one point. However, Anthropic, which offers some of the most popular AI models for coding, cut Windsurf's direct access to its Claude AI models in June, with Anthropic co-founder Jared Kaplan attributing the decision to rumors that OpenAI, its largest competitor, was close to acquiring Windsurf. That makes sense. So Cognition notes in its press release that Windsurf will now have full access to the Claude AI models once again. Over the weekend, the information reported that Windsurf employees who had joined in the last year did not receive a payout in Google's billion-dollar reverse acqui-hire. That prompted many users on social media to scoff at the deal, which seemed to largely benefit investors and leaders at the startup. Cognition President Russell Kaplan indicated that the Windsurf acquisition truly came together over the weekend, just hours after the Google deal was made public. Incredibly excited to share that Cognition is acquiring Windsurf. What an insane weekend. From first call after 5 p.m. to a signed definitive agreement this morning. There's a lot to build. The acquisition includes Windsurf's IP, product, trademark, and brand, and strong business. Above all, it includes Windsurf's world-class people, whom we're privileged to welcome to our team. Cognition notes in its blog post that 100% of Windsurf employees will participate financially in this deal and have vesting cliffs waived for their work to date. With the addition of Windsurf's talent and IP, Cognition may have a supercharged startup to compete with giants in the AI coding space, such as OpenAI, Anthropic, and Cursor. In March, Cognition reportedly held talks to raise hundreds of millions of dollars at a $4 billion valuation. In March, Cognition held talks to raise hundreds of millions of dollars at a $4 billion valuation. You think my numbers are... Guys, I'm impressed by you. I'm impressed by you. Can you believe that you have established a 6% ownership in a company that could do... I don't know why I can't do something like this. Let's see. It's unclear if the round closed, but Cognition may need such a war chest to compete in the AI coding space. Cognition was one of the first AI startups to launch a fully fledged AI coding agent, Devin, which didn't just help with tasks, but also promised to automate them completely as if it were a junior software engineer. This is what Railtown has. But I think the difference is Railtown is not open AI. It's internal AI. And I think that's better, but who knows? This was a markedly bold approach compared to Cursor and Windsurf, which offered environments for developers to easily access AI tools. So they launched a fully fledged coding agent instead of an environment. However, early reviews found that Devin made mistakes, perhaps indicating that its AI agent technology was ahead of its time. That may no longer be the case. In recent months, Cursor and Windsurf have started offering more agentic AI products that are starting to resemble what cognition offers. In a recent interview, Cursor CEO Michael Truell said he believes AI reasoning models are advancing enough to make coding agents viable, and that he expects 20% of coding workflows to be handled by agents in 2026. Now cognition has the versatility of offering both AI coding agents and an AI-powered IDE, perhaps enhancing its value proposition. Earlier this week, Cognition also landed a major customer in the Wall Street juggernaut, Goldman Sachs. With the acquisition of Windsurf, it seems Cognition has become a more serious competitor in the AI coding space. I don't know if you understood half of that, you understood more than I did. Windsurf versus Cursor. Which AI coding app is better? Building apps with Windsurf's AI coding agents. Why Windsurf is the best free AI code editor you've never heard of. Windsurf AI Agentic Code Editor, features, setup, and use cases. Google hires Windsurf's execs in a $2.4 billion deal to advance. Let's see what that says. This is Reuters. I want to see what Google got. This is from Reuters. Google hires Windsurf executives in a $2.4 billion deal to advance AI coding ambitions. I mean, Google could buy Railtown, but I guess they don't know about it yet. Google is paying $2.4 billion in license fees. Windsurf investors will get liquidity whilst retaining stakes. Deal structure mirrors other acqui-hires by tech firms. Google has hired several key staff from AI code generation startup Windsurf, the company's announced on Friday, in a surprise move following an attempt by its rival OpenAI to acquire the startup. Google is paying $2.4 billion in license fees as part of the deal to use some of Windsurf's technology. But so then what did Windsurf just sell? So Windsurf still retains the technology, but where does the $2.4 billion where does the $2.4 billion paid in license fees go? Does it go? Well, let's see. Google is paying $2.4 billion in license fees. Does it go to Windsurf or does it go to Cognition or does it? Anyway, Google is paying $2.4 billion in license fees as part of the deal to use some of Windsurf's technology under non-exclusive terms. Wow. What the hell did they pay for? Google will not take a stake or any controlling interest in Windsurf. Windsurf CEO Varun Mohan, co-founder Douglas Chen, and some members of the coding tools, that's a hell of a lot of money just to pay a handful of people, and I guess investors. And some members of the coding tools research and development team will join Google's DeepMind AI division. The deal followed months of discussions Windsurf was having with OpenAI to sell itself in a deal that could value it at $3 billion. This highlights the interest in code generation space, which has emerged as one of the fastest growing AI applications. Sources familiar with the matter told Reuters. The former Windsurf team will focus on agentic coding initiatives at Google DeepMind, primarily working on the Gemini project. We are excited to become some top AI coding talent from Windsurf's team to Google DeepMind to advance our work agentic coding, Google said. The unusual deal structure marks a win for backers of Windsurf, which raised $243 million from investors, including Kleiner Perkins, Green Oaks, and General Catalyst, and was last valued at $1.25 billion years ago, according to one pitch book. Windsurf investors will receive liquidity through the license fee and retain their stakes in the company. Oh my gosh. What a deal. Google's surprise swoop mirrors the deal it did in August 2024 to hire key employees from chatbot startup Character.ai. Big tech peers, including Microsoft, Amazon, and Meta, have similarly taken these so-called acquire-hire deals, which some have criticized as an attempt to evade regulatory scrutiny. Microsoft struck a $650 million deal with Inflection AI in March of 24 to use the AI startup models and hire its staff, while Amazon hired AI firms Adept co-founders and some of its team last June. Meta took a 49% stake in Scale AI in June in the biggest test yet of this increasing form of business partnerships. Unlike acquisitions that would give the buyer a controlling stake, these deals do not require review by U.S. antitrust regulators. However, they could probe the deal if they believe it was structured to avoid these requirements or harm competition. Wow, that's a lot to absorb. The development comes as tech giants, including Alphabet and Meta, are aggressively chasing high-profile acquisitions and offer multi-million-dollar pay packages to attract top talent in the race to lead the next wave of AI. Windsurf's head of business, Jeff Wang, has been appointed its interim CEO, and Graham Marino, vice president of global sales, will be president effective immediately. The majority of Windsurf's roughly 250 employees will remain with the company, which has announced plans to prioritize innovation for its enterprise clients. Reporting by Kendrick Kai in San Francisco, Crystal Hu in New York, and Kritika Lamba in Bengaluru. Editing by Shailesh Kuber and Muralikumar and Anatharaman at Reuters. Wow. Jason, that's amazing. I've gotta study that when the lawnmower's not going and when I'm not distracted. That is amazing news. Thank you for bringing it. To me, it highlights several things, but most of all, the demand, the frenzy, as one of the guys said, to get into this space. It's all good for Railtown. It's very good for Railtown. Very good. And remember, I gave my projection if they got 3% of the market. So in terms of competition, I wouldn't be worried that these competitors are going to get it all. They got Goldman Sachs, but we got a 3 weeks ago, we announced a sales. What the hell are those things called? I think it's enterprise sales agreement. We got an enterprise sales agreement with a company that the London Stock Exchange is its client. I'm sure there's overlapping missions, but I mean, they don't hold a candle to Railtown or the other. They don't scare Railtown. 611 to 628, so it's 0.611 by 0.6288, 39.5 to 53.5, 664,000 shares, 251. We're coming into the last hour. My brain is not firing on all signals, but we'll see it through. We'll see it through. That was amazing, Jason. That was amazing. Thank you very much. I wouldn't have seen it. That is an amazing story. And the values they're paying, they're throwing money around. And the company was offered a value at $4 billion just 3 months ago. And it's not, well, I don't know. Maybe it's further ahead than Railtown, but I don't think it's going to take Railtown very long to catch up to those kind of numbers. 80 million ARR. I think Railtown could be at 100 million by the end of the year. I'm talking about forward projections. I'm not talking about, but that's all they need to get excited. I'm going to buy more on the dip. Good for you, Justin. Hey, Steve. Steve, you're going to be, everyone here is going to call you the king. And it's going to be good to be the king. You are going to be the king. And you bought it at a great price. Wow. So you took advantage of these people's asinine trading. Jack Hamilton, flying bus driver. There's a few folks here who have a whole lot more than me. Now, you guys, flying bus driver has a great amount. Anybody over 25 grand, anybody with 10 grand, anybody with 5 grand. If you just heard what I read out, that's what's happening now to a startup. God. You guys, I congratulate you. I really do. You bought 6% of a company in one of the hottest areas alive. Hey, Steve. Thanks, Uncle Bill, for the steady voice on the stock. Let's go. Yeah, but I get off in all these tangents. But you try talking to yourself. I'm ready. I'm ready for my Alzheimer years. I'm learning how to talk to myself. 661 to 6288. I'm catering ice cream event at a corporate store, listening to your commentary. I'll have the chocolate mint, and a vanilla, and my friend will have 2 strawberries with chocolate sauce, and I'm trying to confuse you. Gary Madrell, hello. Wow, Jason, I'm just amazed by this story. I'm absolutely amazed by it. I'm going to write down your last name. There's a few Jasons. Harbison. I'm amazed by this story. It makes me wish these guys would get off their bottoms and get the deal done, and then go get, if the one has Goldman Sachs, we should go get Morgan Stanley. Let's get going. Get the deal done. Get the deal done. All right, let's see how the quotes are going. Everything's in the red. I'll run it down since it's 3 o'clock. GDC's down 22 cents at 320. G-Bucks is down 11 cents at 175. ZJYL is down 0.625. Down 0.0156 at 62.5. Finger is down 12 cents at 177. Railtown is down 0.0188 at 62.112. Chocolate mint chip. Excellent choice. I usually just order the fat-free yogurt vanilla. That was so exciting. I'm going to have to gather information and compare it. I'm telling you, Jason, that was amazing. Everybody else probably already knew about it, but that was some of the most amazing commentary. And I personally think Railtown is better, but I'm not positive, because they have a term for it, but it's within the company, and it's closed instead of being out over the internet. But maybe I'm wrong. Maybe that's not qualitatively or in terms of money better. Everything's in the red today. What's going on? Nothing's up. I guess nothing's up. Let me see if I can show you that chart if it came. Yeah. Look at this valuation chart. Nvidia, $4 trillion, 4,000 billion. And then you've got combined Meta and Alphabet are tied almost with Nvidia. Microsoft is lower, but it's still up there. And then you've got Costco, Walmart, and Amazon at 3.5 trillion combined. You've got Apple falling behind in the AI space. So are they a buyer of Railtown and its constellation of companies in the network? Maybe. And then you've got the automobile, the U.S. automobile industry comes in at $1 trillion. And then you've got the Comcast, Walt Disney, and Netflix combo coming in at $1 trillion. And then you've got all the food and crap that's all fake food, Chipotle, fake coffee, Starbucks, freeze-dried crappy food, McDonald's, and a processor of water and corn, high fructose corn syrup, Coca-Cola. They all come in at $500 billion or 600. Unbelievable. Unbelievable. You're unbelievable. I don't know what this chart was. Do I dare show it to you? Because I don't know what it means. I don't know what this means. I'm going to put it up. Oh, it's the news. That I was going to show you on Yahoo. The news on rail was what I showed you earlier. That's why I put that up. It's not that relevant. And I want to see if I have. Yeah, I want to show you this on. I think this guy's pretty good with his posts, and I just want to show it to you. Let me take Jack down. This gentleman, I think, has a very logical and experienced approach to investing. And he says I just want to bring it up because while the stock is down, for those of you who are still in it, you might be interested in this. Technical analysis is a lot like beauty. It's all in the eyes of the beholder. I don't agree with his technical analysis here, but that doesn't mean he's not right. I could be totally wrong. I don't see an exciting technical pattern here. However, I would give him broad support because he may understand a fundamental story. He may be more like I am, where he understands a fundamental story. And then if you're excited about that, I don't know if there is one, that goes into your reading of the chart. So this may be an indication that they're going to do something. I look at this chart, if you can ignore all of the spikes upward, which I'm sure you're not supposed to do that. But I think you can see just one big one or a couple of declining wedges, which are very bullish. So anyway, he says G-Bucks 185, nice pop off the lows. I would imagine a fight at the $2 level. Makes sense. And because a close above 2 would change momentum. He thinks it's only a matter of time. Excellent volume building here. So anyway, I just bring that up. I'm not trying to get you to go buy it. For those of you who have it, the stock's down today. But I would, those are the kinds of things that when it goes into my head to be on alert, that, wonder why he's posting that. Maybe there's something there. You just keep it in the back of your head. But I also, just for my 2 cents, I don't like that chart. But that doesn't mean I'm right. I have a very rudimentary understanding of charting. And that's because I don't do it. I just use it as one tool. I've done it for a long time, but I'm kind of like John Lennon at the piano. Or all the Beatles. None of them could read music. So anyway, on that topic, if like Steve or myself, you sell out of something, like I sold out of G-Bucks, and if for some reason out of the dozen or 15 companies we've tried to play the short squeeze and catch the squeeze, and then the jerks come on here and turn it into an investment like it's supposed to be IBM or something. For me, I've learned enough that it just doesn't work. You've got to be on the inside of information flow, which is quasi doing the same thing the shorts are doing. And on both sides, on the short side, you have a bunch of criminals colluding. You have the acquiescence of the regulators. You have a whole cabal of attorneys who join in. They put their ethics, I guess attorneys lose their ethics in law school. And then there's all that precedent. Anyway, everything is, like I say, yeah, I don't think it's a cottage industry. I just think it's industrialized and it's all set up. There's no way to win. Everyone's bought and paid for. And on the long side, the only way to catch them out is you've got to have sudden news that brings in huge buying because the value changes overnight. And or you've got to have huge price change because buying comes in, whether it's for a sensible reason or it's nonsensical. But as long as the buying comes in, and so the price keeps moving and it's causing pain to the prime broker, and then the shorts have to scramble to cover, and they haven't had time to move their shares over to Europe where there's no record keeping. It's beautiful, isn't it? It's beautiful. But we'll go rescue Israel. We'll go spend trillions of dollars in our people and their lives to rescue Israel, but no taxes paid on any of this. No taxes paid on any of it. But then you also need these three things alone. Each ingredient could do it alone, but you probably need a combination. You need to get a trading desk or a computer, an algorithmic computer, to start buying and match wits with the algorithmic computers selling. They've got to have a pattern that they recognize. And so the other computer has to get scared. They don't have feeling, but they've got to see a pattern that, oh my gosh, there's all this buying. It's coming from everywhere. And it's in all different sizes. And it's incredible. And the price is up. And there's a headline. And then they cover. So, and then that brings other shorting in. And then they cover. Feeds on it. And then you have a squeeze. It lasts all of about a minute. Well, probably a few days. And odds of it happening so far, then very difficult. We've had the HKDs. What were the other ones? HOLO, TOP. But how many of those did we participate in? But anyway, if you know about something like that, you can join in. But do we ever know about anything like that? I don't know. It's even then though, it's risky, like Nixie, to pick a real wiener, although that could still, I guess it could still do something. But Nixie, 2 times it looked like that computer battle was happening. And 2 times it, after 50 million shares, something stopped it. And that's the thing. It's just, I think it's, number one, all the odds are against us. Number 2, it's a gamble. And every time you play, you lose. So you're chip stack goes down, 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 and it's just Railtown's the place to be. If one of them works, great. I tried it. I ran out of time. Somebody else made money. I hope they made a lot of money. But if you just heard what I just heard about the excitement in this space, guys, they raised money at a $400 million valuation just months after starting up. They were raising $400 million at a $4 billion valuation. $4 billion valuation. Railtown they don't have to be sold out. They could raise money at a huge valuation, and they're a public company. And we don't have to worry about figuring out if they're squeezing or if it's going to work or somebody's going to come in and stop it. Because you never know in a squeeze. Like with Nixie, it goes from 2 to 12. Hey, it's really going. And then somebody throws a wrench in something goes askew on the treadle, and it stops. Next thing you know, it's back down to I don't know. I can't get a quote. I screwed up. All right, we have 45 minutes. How is it going to close? Is it going to close in the green or stay in the red? That will give us a pretty good indication, I think, of whether or not they're getting close. They've got to be getting close. If I were Railtown, I'd be calling the attorneys and saying, look at these deals. What the hell are you doing? And nothing will change because attorneys walk around in their self-sufficiency and their self-supremacy. I went to Harvard. I know what I'm doing. In moot court, it said to do this. And in Sanderson's business law class, we learned that we should do this. Can't you see? We have to get out there. We have to get customers. We have to sell. One of our competitors just got bought out. We have to get out. No. We've got some legal work to do. I've got to check with, my senior partner, and I want to bring in Karen from London. And can we arrange a Zoom call so we can go over? I just want the document done so we can get going. No. Let's go through this line by line. Anyway, that's what I imagine. That's what I imagine is going on. I've been through it before. It's so frustrating. All right, let's see what Country Computers was told about RLAIF. Yay! I can give you the quick and dirty. I'm starting to repeat myself, but I can give you the quick and dirty, and you should buy more than that. I can't give you advice, but if you're interested and you can handle it, that's something you decide. I think 2,771 is a great position, but now is the time to own as much as you are comfortable with. I can't, but because of a thing. Let me start there, country gentlemen. I'll start there with I just have to find I'm not sure Railtown will go to $1 because of Powell. I've got to think about that. Wall Street does use models, you're right, when interest rates come down, earnings become more valuable. That's true in general. So that might. Finger getting hit today, down 11 cents. Shen, a real disappointment with the lies. I don't think he lies. I don't think Martin Shen lies. I don't think Martin Shen is. I think he's a hardworking, honorable man. I really do. I don't think Martin Shen lies. Read on Twitter, Shen had a deal on the table with Univest, but Shen went to the dark side and screwed Finger. I don't think that's right. Shen was, Finger Motion did sign an engagement, which, by the way, they got introduced to Univest by Brent's son. So, I mean, Pete and Brent, I think, is an honorable man too. So, what I think is difficult is just how corrupt Wall Street is. There's no honor, there's no enforcement, and it's just annoying. But anyway, they did sign a deal with Univest. It was a 2-year deal. It had a mutual disengagement, I think 30-day notice. And I don't know if Univest, I have a very strong suspicion that Univest never brought a deal to Finger Motion to finance. They just sat on that mandate and did nothing. On the other hand, it might be that Univest didn't bring an attractive deal. They might have been a toxic deal. But anyway, as soon as they disengaged, to the credit of Roth Capital got a deal done. I don't know, within 60 days, within 45 days. I thought that the haircut was severe. I thought that the warrant coverage was maximum, and I believe it was a hedge against shorting from the toad. However, they got that deal done at 150, and there was New Year's coming up, and a month-long celebration. Who knows what they would have raised money for after New Year's, and who knows if they would have had the contract. So it wasn't the nice price, and it certainly is a continuation of the punishment that Cromwell Cheesecake Calhoun's over-the-counter markets caused to CEOs and shareholders. But I think Martin Shannon did the best he could, and I think he should have taken the deal. Ironically, I think they should have done a deal. But who knows what variables they were looking at. It's easy to sit in the peanut gallery and question it. All right, you want me to but each time you walk by, I fall to pieces. I fall to pieces each time you walk near, and I fall pieces. You want me to act as if we never knew. Na, 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 na. Na, 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 na. When you walk by, I fall to pieces. Conway. It's another rainy night in Georgia. A rainy night in Georgia. All right, I'm going to answer country computers. I'm going to answer. 321. I'll try to do it in 10 minutes, but it might take 15 minutes. I'm going to start with research, and I'll hit it quickly. Railtown, a year ago, received this research report, July 2nd, 2024, from Research Capital. It's 20 pages long. I won't read the whole thing. I'm just going to go hit the highlights, I hope. With a speculative buy at $2. The target is $2. Going to the third to last page, their target, they have a bear case of 90 cents. So their target, if things don't work out, it goes to 90 cents. A bullish case of 360 and the base case of $2. Now this was written a year ago before they agreed to merge with AI Partnerships Corp. But let's quickly go to the story of Railtown based on this research. It's easy to get bogged down in. But anyway, Railtown AI Technologies, advanced AI for efficient software development. Did you hear the frenzy? Advanced AI for efficient software development. Did you hear the frenzy? Railtown AI is pioneering a powerful tool to transform and enhance software development, efficiency, and quality. We believe the company's first mover, I don't make it up, first mover advantage and the founder's history of success position it well to capture a meaningful share of the market over the long term, which is, just remember, they say meaningful. Railtown AI poised for growth. Railtown AI is developing a robust tool to revolutionize software development by boosting productivity, improving quality, saving time and money. Acting as an intelligent assistant, did you hear that? I forget which guy was which. He said it's an assistant that helps you do the repetitive tasks, and they're just talking about it. All right, so they've developed a robust tool to revolutionize software development. It acts as an intelligent assistant. It learns client software in order to automate repetitive tasks so it can monitor performance, and it serves as a built-in quality checker. And this is all in the client's vertical software system. It's not out over the whole internet so everybody can see it. The platform currently functions as a root cause analyzer, a conductor, a velocity dashboard, and release notes automator. With future enhancements, I love this. This one sounds great, automatic ticket generation. But the thing I love, it's got a no code virtual software development, no code. You don't even have to code. It does the coding for you. Railtown's addressable market is projected. Now listen to this. Railtown's addressable market, according to a year ago, is expected to exceed $3 billion by last year, driven by the growth in software developers. They target small to medium businesses and enterprises through direct sales, and they also partner with Microsoft partners like Quisitive. That's one they talk about. But they're they're partnered, it's on their website. They're partnered with, a revenue sourcing think tank, a retirement pension plan out of Canada. But it's also Nvidia, AMD, and Microsoft. And they're in with Microsoft 2 or 3 times. And the good thing to remember is the founder, one of the founders of Railtown, Corey Brandolini, who's, I think he has less hair than I do, but I don't think he's as old as I am. And I think he's, he looks like he's better positioned to go on a long bike ride or play racquetball or handle himself. But he wears his hair very close cropped, but it looks gray. I don't know if it is, but I think he's got 25, 30 years of experience at least in software development and in handling finance. Anyway, he built software and he sold that company to Microsoft. Just put that in your head. Anyway, so this research calls the addressable market $3 billion. And they give an target price of $2 a share. This is a year ago. Things move rapidly. And they use 12x and they use a 20% dilution factor. So their market penetration is 3%. There's a little stub, 0.5%. It's just too confusing. So 3% of 3 billion, and they go to 170 million shares. They get a target of $2. Page 3. I skipped some important stuff, but wow, that scared me. It sounded so close. I was afraid something was coming in the window. Railtown AI, the future of efficient and effective software development. Railtown AI is developing a powerful tool to enhance software development by, all the same things. More productivity, better quality, and saving time and making money. Acting as a helpful assistant, it learns clients' software in order to automate repetitive tasks, allowing developers to focus on more critical work. Didn't you just hear that story? The platform monitors performance. It also fixes problems before they occur, and it serves as a built-in quality checker. Railtown AI deeply understands your feelings. How does that make you feel? Mm-hmm. Anyway, Railtown AI deeply understands client software, automates mundane tasks. It continuously learns and improves and provides clear performance reports. It unifies all software data for easy use and customization to fit specific needs. By analyzing data in real time to quickly identify and fix issues and automating tasks like bug report generation, Railtown AI helps developers build better, faster, build better software faster and more cost effectively. Currently, the platform improves developer efficiency by functioning as a root cause analyzer, a conductor, a velocity dashboard, and release notes automator. In the next stage, Railtown plans to add, and I think they've already done this, plans to add automatic ticket generation, and future stages will include no-code virtual software development, significantly expanding the addressable market and marking a pivotal milestone for the company. And they have patents, which may or may not be smart. All right, so this guy's projecting the global population of software developers to be basically 29 million last year, people, 29 million developers. And he uses a pricing structure of $108 per year, per user, per deal, and that's how they come to the 3 billion, 3% penetration. Pretty weak. You know, up there they say meaningful penetration. I think 3% sounds kind of limp. All right, strategic alliances with Microsoft partners. Railtown AI sales strategy is multifaceted in targeting both, business and enterprises, small and medium, but also getting into reseller partnerships and collaboration with Microsoft and Microsoft companies, partners. This allows Railtown to tap into established networks and customer bases by joining Microsoft partners. But imagine now AI Partnership Corp that they're just buying. Well, it hasn't been finalized, but I assume it's going through. They have 164 companies that they're going to cross. It says it in the news release. They're going to cross-sell their product. Further using established networks and customer bases. They can ramp up their users and I hope revenue. We'll find out. And maybe that group had 80 million in annual recurring revenue. I think that's a puny plan. I think Railtown can ramp up to that level really quickly, particularly if it's a matter of focusing on 2026. They say it here again. We believe there is a high probability of capturing significant market share, but then they use a 3% penetration rate. That wouldn't fly on Tinder. All right. Railtown, AI tool for smarter software development. Railtown AI is a technology company who develops artificial intelligent tools tailored for software development. It's just the space they got hot and bothered about. The company's AI model is designed to understand various aspects of software development comprehensively. Railtown AI offers both cloud-based and on-premise deployment. The platform is notable for its quick processing, which enables real-time decision-making. It learns and improves over time by analyzing data provided by its users. Furthermore, Railtown's platform can handle multiple types of data, including images and customized reports, which adds to its utility in diverse development environments. It translates everything. It's like a universal translator. Traditional, well, I'm not going to go through all that. I'm not, they created this patent, application general intelligence, and these are all the different, I'll read them off. These are all the different products out there that you can buy, your developers are using, and that brings all that data down into their platform. So the data is fragmented across GitHub. Let me put my glasses on. I can't read it. Anyway, I can't read those. Jenkins, Terraform, SolarWorks, Splunk, Google Docs, Office 3, Confluence, Notation, SolarWinds, I said, Google Docs, I said, I just can't read some of those. But you get all that data and you go down into the AI's platform, the Railtown platform. Railtown provides a single platform that comprehensively ingests and unifies all application data, making it all make sense. So I still can't read those, but you can see the outside applications that come into the Railtown platform. So this enables users to access and act on all of those applications' data. It gives deep application understanding, task automation, monitoring, and reporting. And then it goes, it's everything, tickets, logs, whatever wiki is. And this platform, Railtown AI platform, processes and trains on the data set, which is provided by the client's application, as well as ongoing client feedback. The goal is to develop application general intelligence, that's the trademark, which refers to the platform's capability to understand and perform various development-related tasks autonomously. The central component of Railtown AI's process is to process the incoming data, and it leverages AI to inform teams, perform tasks, and create solutions. And then they describe each of those. I'm not going to read it. The platform exposes this interface. It allows third-party developers and users to interact with it. Through it, they can request the platform to perform tasks or create new features and technical solutions without needing to write code themselves. These users can ask Railtown platform to execute specific tasks or generate new functionalities via the platform. This capability helps streamline the development process, enabling rapid implementation of solutions and features by leveraging the platform's AI intelligence. In summary, the Railtown AI platform ingests various types of development data from a client's application, processes this data to build application general intelligence, and uses this intelligence to inform teams, perform tasks, create solutions. Third-party developers and users can interact with the platform via application programming interface to leverage its capabilities without directly writing code. They give a chart again, how it all works. You see all this goes in, all that comes out. The current value proposition and future potential. Listen to this. Sorry, I better get some water. Based on our discussion with several customers, the value proposition of Railtown AI's tool is quite impressive. This is a year ago. In our interviews, customers reported that Railtown's platform saves each developer about 15 to 25% of their time. Given the high costs associated employing software developers, this level of efficiency translates into a significant return on investment. This makes Railtown AI's tool not only a time saver, but a cost-effective solution. And it goes through what they have. Root cause analyzer, conductor, velocity dashboard, release notes automator, ticket generator, progress reports, no code virtual developer. And then they give you this chart, which I find hard to read. And they have a list of features. They hit every one. And you see GitHub has 3, and the rest there have 2 or 3. So they compare Railtown AI to GitLab, Jenkins, Jira Software, Splunk, New Relic, and SonarQube. And just reading around down the features, these all apply to Railtown. Single source of truth, team velocity, developer velocity, conductor AI assistant, release notes automator, ticket generator, progress reports, API no code virtual developer, root cause analyzer, categorize errors, group errors, intelligent alerting, catch errors early. Railtown does all of that. GitHub does team velocity, developer velocity, and progress reports. Jenkins does catch errors early. Jira Software does team velocity, developer velocity, and progress reports. Splunk does root cause analyzer, categorize errors, intelligence alerting, and catch errors early. New Relic does intelligent alerting and catch errors early. And SonarQube does catch errors early. So you can see Railtown is ready to rock and roll. So they have a strategic partnership with Mila, Quebec. And this is a year ago. They're still in the partnership. Railtown entered into a strategic partnership with Mila, Quebec AI Institute, which may benefit the company in accelerating the time to market with each product release. It's also known as Mila, Montreal Institute for Learning Algorithms. It's a good place to send your kid. I don't know if it'd be punishment, though. It's well respected. Anyway, these collaborations are expected to immensely benefit Railtown by providing engineering talent, but non-dilutive financing. And then they're also in the Microsoft co-seller program, which they work alongside direct sales efforts. They use resellers who white label Railtown's functionality under their own brand, and they have exclusive sales agreements. Revenue from resellers comes from a combination of monthly licensing fees, support charges per seat, per project. Microsoft co-sellers targeting a similar audience have more flexibility in branding and can offer competing services. Revenue from co-sellers per seat, per project fee, with a commission paid to Microsoft. Finally, Railtown directly targets SMBs with month-to-month subscription model. This multifaceted approach allows Railtown to cater to diverse customer preferences and expand its reach through established trade sales channels. Who just bought this company? It wasn't Microsoft. So they give you a list. They give you a list of Railtown's potential revenue channels: reseller, Microsoft co-seller, and direct sales. Add to that they just entered into the acquisition of AI partners, 160 companies they can cross-sell. Look, they give the addressable market and how much it's going to grow, and they give the bull case and bear case that I just showed you, which gives a target of $2 a share, base case, bull case 360, bear case 90 cents. They also give a list of acquisitions which have been made obsolete by this news that Jason just showed me. This is obsolete. But Microsoft bought Xander, Adobe bought Figma, Salesforce bought MuleSoft, Zoom bought Five9, Intuit bought Credit Karma, Google bought Looker, Salesforce bought Slack, Microsoft bought Activation Blizzard, Salesforce bought Tableau, IBM bought Red Hat, Amazon bought Twitch, Nvidia bought Mellanox. I'm not going to go through that all, but to let you know that that's what's happening in the space. Now let's talk quickly country computers. That's Railtown all by itself. Railtown all by itself. Railtown announced that they were buying AI Partners Corp. And AI Partners Corp has 2 things about AI Partnership Corporation. They're founded by gentlemen who were CEO in Canada's retirement system and who backed Constellation Software as a financier. A guy named Dr. Tom Core was the CEO, president of Ontario Municipal Employee Retirement Services, and John Ruffalo backed Constellation Software. Constellation Software had a model to roll up mature software companies into a parent company. They went from it took 13 years or something. They went public in 2006, but they really got traction in about 10 years ago, 12 years ago. They went from under $10, maybe $1, it's hard to read on the chart, all the way to $5,000 in Canada. And they're still there. And that guy, John Ruffalo, started Omer's Venture Capital Fund, or Omer Ventures, within the retirement system. These guys founded AI Partnership Corp, which has as its model, I think, to replicate that roll-up strategy, maybe not on the scale, but certainly on the exciting magnitude. They collected 160 plus AI private companies in a network under AI Partnerships Corp, with the goal of rolling the best of the best up to the Partnership Corp. They went out to conferences and, seeking new companies, I assume. And Railtown went to conferences as they've come out of their R&D phase. So Railtown joined this network in November or December. It's in the news stories last year. And it slowed down. What's going on with this other company I just read to you? I forgot the name of it. I wrote it down. I expected that kind of acceleration and thing going on with Railtown. I had no idea how massive it is, but I thought everything would pick up at a pace because technology moves quickly. But what happened is something even bigger. Railtown announced in February, on February 11th, that they were buying AI Partnerships Corporation. They're buying them. And so they're going to take over the roll-up strategy, and they are going to be able to sell. It's in the body of the release. They're going to be able to cross-sell their best product, which is called Conductor, across all of those 160 companies and then their end users. There's going to be enterprise sales agreement. There's already 3 announced. Let me just tell you, country computers, the revenue, I saw it on Twitter, took a picture of it. I'm not going to post it, but from a very credible source, the revenue in that partnership of the companies, 160 companies, currently is 400 million annually. 400 million. I don't know how strong that is. I don't know if it's just a projection. We'll find out. But 400 million. Using any kind of, 80-20 rule, 90-10 rule, at some point, Railtown is going to absorb the best of those companies to lock down that as much of that revenue as they can start with. I think that might be an explanation for why it's taking so long. They're negotiating those agreements. If they didn't, those criminals who were on here would destroy the stock price, and they'd get it done, but it'd be all diluted to hell. So that's why I think Corey and Marwan Haddad's experience in finance and others comes to our benefit. Anyway, let me just quickly give you a breakdown of just that revenue. 400 million. They're not going to be able to roll it all up, I don't think, quickly. If you do 80-20, they get 320 million. I don't know. It's possible. But let's take half. Let's say they roll up enough companies to get half of that revenue. That's 200 million. Now, what I don't know is what model will they use? And we just saw a model that excites me where you buy the team and you license it and all that. But I don't know what model. Let's assume that they can acquire the 200 million, but they don't issue a lot of stock. Instead, they set up some sort of revenue sharing deal, and it's a 50-50. Well, in that scenario, Railtown and shareholders would enjoy 100 million annualized in revenue based on old data. I'm sure it's grown by now. 100 million. Just put that in your head. I'm not going to focus on that, though, because I don't know it by heart. Corey Brandolini, and I'm running out, I'm taking too long. I'm just going to finish with this. Corey Brandolini did a couple of videos, which I've shown here, that the AI software development market, the number that stood out to me is, and I'm paraphrasing, but the market that the spend that's ahead, companies are going to spend $300 billion to acquire this AI expertise. $300 billion. That will pay for itself in improved performance and ability to grow customers. So I took that 300 billion and I used the 3%. I used the 3% penetration of the research report. That gave a silly number. So then I took 10% of that. I thought that gave a silly number. So I took 10% of that. I don't think any of those numbers are wrong. It's just too shocking for the mind to absorb. That's why everybody's falling all over themselves to buy these companies. So using that, starting with 300 billion, assuming 3% penetration of revenue, and then discounting it 10%, and then another 10%, I got to 90 million in annualized revenue. Now, this is not saying that it's going to be historic. It's not saying it's going to be accomplished. It's saying that they can project it confidently, let's say for 2026. I went through country computers. I went through the multiples. Currently, the multiples being paid, I understand it, are 100 to 150x of revenue, or the valuation models, 150x on the high end. This research used 12x. That's ancient history. I think 150 is real, but that sounds too much. So I used the median, and I don't know what it worked out to, of the average deal multiple was 25x for the last 6 years, 91 deals. The average was paid was 25x. And then the highest paid was 50 something, but call it 50, and then used 100. I took something in the middle. I guess it would be slightly more than 50x, right? So anyway, that gave me a valuation target of $5 billion on Railtown, and I expanded the number of shares to 170. You divide it out, it's $30 target per share. Now, when? Does it really get to 90 million a year in revenue? That one we were just talking about had 80 million already, recurring revenue. But anyway, so when? Could it be later in the year, next year? That's always possible. But I believe Railtown, particularly if you, because I started here, Railtown has 5 products: conductor, lane tracks, rail tracks, shredder, and this other thing they announced. That's Railtown on its own. But if you combine this other cross-selling over 160 companies in AI Partnerships Corp, and get some piece of that 400 million, I really think 90 million in revenue is highly achievable as a prediction anyway. So then the question is, was my multiple too high at maybe, I don't know what, 60 times? So what I did is take the 30 and I chopped 2/3 of it off. I only took 1/3 of the 30 to allow for the fact that the revenue might be too high, that the multiple might be too, whatever. So I took the 30, chopped it by 2/3, you get $10. And then you'd say, well, I still don't buy it. There's too many moving parts. I'm skeptical. So I took that number and cut it in half. I took the $10 and divided it by 2, $5. I think that's a target on Railtown soon. Now, what does soon mean? Soon means, to me, Country Computers, as soon as they announce that they completed the merger acquisition. Why? That frees up all the big investors in Canada who are represented by the broker Canaccord. Right now, those brokers can't call. They can't pitch the deal to anybody. There's no research because it's a quiet period. So when that changes, they can come on and start buying. Same with all the big investors that backed all of this, all the big investors that backed John Ruffalo, all the big investors that know about the companies he's associated with, all the big investors in Railtown, all the big investors in all of the 160 companies. They can't buy, they can't do anything until there's distribution of the information that the deal's done. So I think there'll be buying pressure. And finally, 4 o'clock, I'm going to finish with this. That means the company is going to be able to jump up the value creation as a starting point. Right now it's suppressed because there's none of these big buyers in there, and there is some suppression from the bad guys on Wall Street. I'm going to leave it there because it's 4 o'clock. Let's see, it closed at 61.11. 60 cents to 64. The volume is 715,000. Finger is in the green big time. It's 175.98. ZJYL is in the green little time. It's 64.1. Extended hours. G-Bucks is flat, and that's it. That's it. I want to buy, Northwest, you had your dip this morning. You might get another one tomorrow, but I would not play for a dip. You might save, this morning, Steve got it, 3 cents cheaper than the close, maybe 5 cents cheaper than the open, I can't remember. But good for him. He already owns a lot, but he did a good job. But if you're trying to save 5 cents, Northwest, let me just put it this way. The Railtown, let me go through it for the computer guy, Country Computers. Let me just go through it. And I may not have done it for you either. I think I did, but this is repetitive for some people, but I think it's important to know okay, so 5 months ago, it's a long time. February 11th, Northwest, Railtown announces that it's pleased to execute an MOU for the acquisition of AI Partnerships Corp, AIP. AIP is a Toronto-based company with an established affiliate network of over 160 North American AI software as a service companies providing vertical market solutions right up Railtown's alley, and AI development and management tools. The acquisition will create a dynamic organization that derives substantial revenue growth and scales AI solutions worldwide. Let me point something out about that title, MOU. That on the criminal side, they're lazy. They have a computer that has its own algorithm that reads news stories, and it sees MOU, it starts shorting the stock. That's why, that's a suppression. That's a suppression. It's illegal, but they do it. They have the goal of busting the deal. If the deal gets busted, bravo, the investors get sick of it. They can drive the stock down to seller box. That's their ideal situation. They never have to pay taxes. There's stock after stock that's happened to. Or they have to do the huge reverse split, and they get another crack at it to drive it back down. The other thing they can do is the deal goes ahead and gets done, but when they come to market to finance the deal, the criminals have driven it down. They have a pool of money. They flow it through one of these groups like Jeff Easton's, and that money comes in and it goes to the company. Jeff Easton's client hits the big time, and then they keep selling. And the key is that they know in most cases they can destroy the per share value of anything good. MOU in the title starts that. And the company has no choice but to drop their drawers in public because the SEC says you got to tell everybody. The combination of Railtown AI and AIP is expected to provide both organizations with an opportunity to leverage Railtown AI's Conductor product as a platform of choice for AI application development. Conductor. For AIP's current and future affiliates, so they're still getting more affiliates, and their end users. One of the fundamental objectives in the establishment of AIP's affiliate network was to allow AIP to identify and acquire the best affiliates as part of a broader strategic roll-up strategy. The transaction is expected to provide the resulting entity the benefit of capital. AIP's established affiliate network provides a significant opportunity to grow recurring revenue streams through affiliate acquisitions enhanced by deploying Railtown's AI proprietary technologies across the affiliates network and customers. I'm going to skip all the partnerships: Mila, AMII, Microsoft, Nvidia, AMD, UBC. Recurring enterprise revenue, the integration of AI-based vertical market applications, along with AI development and management tools and services across the affiliate network, is anticipated to drive strong recurring revenue growth from long-term enterprise contracts. This, quote, this acquisition represents a transformative moment for both Railtown AI and AI Partnerships Corp. By combining our Conductor platform with AIP's extensive affiliate network and enterprise partnerships, we are creating a powerhouse that will drive significant revenue growth and deliver innovative AI solutions to businesses worldwide. The opportunities ahead are immense. We are poised to expand our reach, scale enterprise sales, and accelerate innovation across industries. Together, we'll shape the future of AI. That's Corey Brandolini. And then Tom Core of AI Partners. Quote, from its inception, AIP set out to assemble the largest network of AI solutions organizations that meet the needs of enterprises in industry sectors that realize significant ROI from the adoption of AI-based application solutions. We found Railtown's Conductor had broad deployment relevance across the entirety of our network. With the combination of Railtown and AIP, we are excited to, I hate this word, actualize our public market vision as we seek to commence an aggressive, targeted affiliate acquisition mandate upon conclusion of this exciting transaction. They've hired Canaccord, which is, it's now a restricted stock. Okay, here's another thing that the computers read. Both companies are working forward to finalizing a letter of intent to formalize the acquisition in the coming weeks. That's what we're waiting for. But that's what the criminals tried to suppress, destroy the stock. They got it down to 22 cents because they want the CEOs to have a hissy fit. and say, you told me I was going to get whatever, 20 million in value of stock, 5 million shares, and now it's only 5 million. I'm not doing the deal, and it busts the deal. That's the game plan of these terrible people. So what it does, you creates a suppression of price, but also Genuity Canaccord, the restricted period during this quiet period, this merger period, nobody can buy. So we're have this, if we have the courage to act, we have all the information. We just have been trained that, well, the stock's sitting here, it's already doubled. But we're trained, oh God, can I get a better price? Can it pull back? It's already doubled. It's all in we're all human, and it's how we've been stock trading. They got your money hot. You can look at a chart. If you pay too much, it's going to pull back. Ignore all of it. The only reason the stock price is 60 cents is because the shorts are gotten in trouble because their automatic computers started selling stock and they don't know how to get out of it. The only way they can is come on and tear me down or try to cause you to act with emotion, like I often do. And then so there's the shorts are suppressing it, and there's no buying. And you want to take the high risk strategy of waiting for a pullback. My boy, my friend, making it I personally don't think anything's going to happen this week. I think it'll be next week now. But I don't know. It's just my skepticism. But that just gives us more chance to add to our positions. And yes, every morning they sell it down a bit. They first let retail come in and buy, then they sell it down. They try to panic. So yes, if you can play that, you can maybe save 2 pennies. But here's the risk you run, Northwest. I don't even know if you're going to be able to buy it at 70 cents tomorrow. Why? Because if the company, lawyers, CEOs, investors, bankers, wives, dogs, poodles can all get together and finally get this MOU completed, they have to announce it. Once it's announced, it lifts, well, we'll find out. It should lift the restriction on the stock. If Canaccord is doing some sort of financing, which is possible, it may keep the restriction on it a little bit longer. But in that case, Canaccord will start pitching whatever that deal is to their investors who can go in the open market. They'll probably want to just do it through the offering, but they can. The story's going to get out, and you want to negotiate for a penny or two tomorrow. I'm not saying for sure, but tomorrow that stock could be $1.20, and you're going to be kicking yourself. I personally don't think it's happening this week. I think it looks like it could be next week. If it doesn't happen in the first 2 or 3 days of next week, it could be the following week. But that doesn't mean the stock's not going to go up. Look, I'm just a guy reading the tea leaves. You and I are both trying to do our best job with it. But the people in the industry, did you see that excitement? I don't know if you saw that excitement. It's just incredible. Those kind of people, once they have a chance to start buying, they're going to start buying. Windsurf. So I wouldn't play around for pennies. if you have a chance to buy it tomorrow, if you're trying to buy it tomorrow. It's not financial advice. Apparently got to say that every single time I even come close. But none of my videos are financial advice. Yeah, you don't want to miss doubling of the stock overnight to try to get 2 cents better. There will not be a pullback to 30 cents in my judgment. There won't be a pullback to 40 cents in my judgment. There won't be a pullback to 50 cents in my judgment. There was one today, I guess, to 58 cents. Will that happen again? Yeah, anything's possible. But I think it's a stupid gamble to try to save 5 cents or 10 cents when any day, if they ever get their act together, and I'm not criticizing. I think the work is intricate, difficult. You're talking to 160 different companies. You're probably, the whole frenzy's going on. I think they're probably working overtime. And but at some point, it's been 5 months. At some point, it's going to end. And if they announced it, it might not go to my $5 number right away because there might be a staged walking up just because of triggering different funds have different time price levels they can arrive to a stock. But I'd say the stock will go over $1 instantaneously. I think it'd go to $1.20, $1.50 overnight in an hour. If they announced it tomorrow morning, and I don't know, they announced that the deal's done at 10 o'clock tomorrow morning. I think by 11 it could be, if they did it at 10 o'clock, I think by 11 it could be $1.50 stock. But that's a projection, not a promise. So no, I don't think you're going to see a dip, and I don't think you should look for a dip. And if you do look for a dip, you are a dip. Just kidding. Israel just made a move. Oh my gosh. And they pick a fight they can't finish. And every time we got to come in. Every time. We have bridges falling down. We have an electric grid falling apart. But every time we got to come in. Every time. Every time. Let me see if that's happening. I hope it's not. I don't see that. I think you must have a better source of information I do. I don't see that. He's got to fix this Epstein thing soon. I don't see it. Let me look in. Drew's Syrian government reached ceasefire after Israel strikes Damascus. So you're right. Swell. Dozens of Israeli Druze still in Syria. Dropping bombs and dialogue. Israel-Syria talks are mind-boggling. I can't do anything. Hurry up and buy. Ward, what's this? Let's think about that. Microsoft has, there's no commas, 4 million partners in their partner program. I got to write that down. I gotta write that down. 4 million partners in their partner program. Imagine that. All right, let's do a little thought process here. I forget who I was talking to, Columbus Computers. Let's say Microsoft has 4 million partners in its partner program. And this, I'm making up these numbers, of course, but this research says that the addressable market are these developers, and they pay $108 a year. $108 a year. So if you have 4 million, I don't know, you have 4 million developers, they pay $108 a year for the Microsoft. That's 430 million in revenue. So if, just stick with me a second. That's 432 at 108. So if Microsoft values their own business at, 50 times, I think that's, I got to get a different computer. All right, so 432 million in revenue. If Microsoft internally gives that a multiple of 50 times, that values that chunk of their business at 21 billion. I don't know if they do that. At 50x. Now, what if Microsoft, and I have no idea, but what if Microsoft were to acquire Railtown in this frenzy, and they said that every partner had to buy Conductor? What would they pay? So let me go backwards. So they have 4 million users, and let's say every member, to be a member, had to buy Conductor. What's the price? I don't know. $15, $10, $12, $6.99. I don't know. I have no idea. Does anybody charge $5 a month? I can't think of a single thing that I subscribe to that's $5 a month. But let's use $5, see what happens. So 4 million users times 5 per month. That's 20 million a month times 12. 240 million. And if I'm just going to make it up, if Microsoft, I'm just giving you a thought process. If Microsoft bought Railtown for $12x, wow, that's a huge number. 2.8 billion. If Microsoft bought, okay, and let's say they're doing it now, let's just say it's 140 million shares outstanding. Get a high number. So let's say Microsoft came and bought Railtown right now for $20 a share. It's not going to happen. But just as a thought exercise that occurs. Then they own Railtown, they own Conductor, then they make their partnership mandatorily subscribe to Conductor for $5 a month. That brings in $240 million in revenue on their own books. They can value that $240 million. They go all the way to 100x. Let's do that just to go to the extreme. They can value that acquisition at $24 billion. Or if we translate it into the shares, I'm trying to be extreme. They paid $20 a share, they can value it on their books at $171 a share. That's the power of at least this one. I'm not saying Microsoft will buy them. Corey has done it before, but just based on this information, I didn't know 4 million Microsoft partners. That's the power of acquiring these companies and integrating it into an existing sales channel. I'm telling you, Railtown, and this is why I got excited about it last October. The natural buyer is Microsoft. It's all over their websites. It's a natural buyer. And I've seen it happen before, so I don't think I'm far off. But if they get in a bidding war, so anyway, I gave you this wide range. So if you're a bean counter at Microsoft, you might say, and that's on $5 a month, by the way, you might say, I'm willing to pay $80 a share because we can double our value, So I'm not saying that's going to happen. I'm trying to talk to that computer guy. Forgot his first name, Compass Computers. I'm not saying it's going to happen, but it's the magnitude of the value creation possible here of taking a first mover, first in class product, putting it inside your own stable, and then everybody in your stable buys it. Microsoft has a way of controlling their own destiny in valuation, at least while we're in this bull market. So I think Railtown is I really think it's the only stock anybody should be thinking about. I don't think you should be thinking about dips. I don't think you should be hesitating because there's another play that might work, which it might. I mean, it's totally possible. I don't know when this deal's going to get done. I've been wrong for 6 weeks. Am I going to be wrong that it's urgent for another day? Probably. And am I going to be wrong that it's urgent for another weekend? Probably. Am I going to be wrong for another week? I doubt it. But I could be. And in the meantime, one of these other stocks could give you all of the things they're promising. But I think those promises are illusions because you won't get out. You'll buy it, it'll go up, but you won't know how to sell it. And in the end of the day, bruises, losses, and you run the risk of not being in Railtown. And did you hear, what is this company? I keep forgetting the name. That Jason just showed us. Windsurf. Do you hear that? Google is paying, this is from Reuters, Google is paying $2.4 billion to Windsurf, $2.4 billion in licensing fees. And this is after another deal just fell apart. So that quickly, Google comes in, they're paying $2.4 billion in licensing fees. And it's just a license to some of the technology. And they took the leaders, the best, the top guys and girls. And then This deal followed months of discussion with Windsurf and OpenAI to sell itself in a deal at $3 billion. But as soon as that fell apart, Google came in and licensed part of the tools and took the brains, some of the brains, for $2.4 billion. And then that's Windsurf. So the deal took investors in a let's call it a VC valuation, 243 million, and it was marked up to 1.25 billion in a pitch book a year ago. You're getting in at the Kleiner Perkins price, the Green Oaks price, the General Catalyst price, in my judgment. So big tech peers, Microsoft, Amazon, Meta, natural buyers, they've done similar deals. Microsoft did a $750 million deal. Meta took, scale it doesn't say the amount. So this development comes as tech giants, including Alphabet and Meta buyers, aggressively chase higher profile acquisitions and offer multi-million-dollar pay packages to attract top talent. I don't hear them calling me. This is in the race to lead the next wave of AI. And you're going to try to futz around for a few pennies? So Windsurf's had a business. All right, so that's that article. There was another article that talked about how quickly this other deal came together. Yeah, Cognition comes in. So Google licensed it. Cognition comes in. It's the startup behind the viral AI coding agent, Devin. I bet if I had an interview going with Corey, I'd ask him about Devin. He'd probably be very polite. But I bet the conductor agent is better. It's at least as good as. But I bet it's more developed. I bet he calls it battle tested. It sounds like this is still being worked on. I don't know. I shouldn't make assumptions because I don't know. So anyway, Cognition, the startup behind the viral AI coding agent Devin, announced that it has signed a definitive agreement to acquire AI coding startup Windsurf. The announcement comes just days after Google hired away all the top CEOs and crap and did a licensing agreement. They left 250 people behind. But Google's deal occurred just hours after the OpenAI's $3 billion offer to acquire Windsurf expired. Clearing the way for the AI coding startup to explore other options. Guys, there is going to be a feeding frenzy. And the valuations, you can't believe how high they will go. Anyway, that's what they say here. The frenzy around Windsurf represents a new peak in the wild race to develop AI coding tools. Railtown AI is developing a robust, this is a year ago, it's developed, boy. Railtown AI is developing a robust tool to revolutionize software development. The frenzy around Windsurf represents a new peak in the wild race to develop AI coding tools. This tool, acting as an intelligence assistant, learns client software, automates repetitive tasks, monitors performance, quality checker, blah, 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 blah. And the one I like, it does no-code virtual software development. Anyway, so the frenzy around windsurf represents a new peak in the wild race to develop AI coding tools. Specifically, the AI-powered integrated development environments, which it's called an IDE, that Cursor and Windsurf offer. In recent months, the businesses around AI-powered IDEs have skyrocketed. In recent months. Look, in recent months, the lawyers have this whole thing bottlenecked. I'm blaming the attorneys. From February 11th, when they locked up this deal, to now, that's recent months. In recent months, the businesses around AI-powered IDEs have skyrocketed, pushing Cursor's annualized recurring revenue to $500 million. While Windsurf's business is smaller than Cursor's, it has achieved impressive growth in the last year, garnering interest from several larger companies. Quote, the last 72 hours, in 72 hours, the last 72 hours have been the wildest roller coaster ride of my career, unquote, said Jeff Wang, Windsurf's former head of business, who was made interim CEO of the startup just days ago. I hope he gets a good pay package. After Google hired the startup's leaders, quote, to our new teammates at Cognition, we feel incredibly lucky. Oh my gosh, to be young again and to know coding. Cognition says it's acquiring Windsurf's IP and product, which includes its AI-powered IDE. Let's go back. What is IDE? IDE is an integrated development environment. And they get the employees. Cognition did not announce the price. However, the company said that Windsurf reached 82 million in annual recurring revenue. 82 million. I just showed you a couple of ways I believe Railtown can be at 100 million. Now, I don't know if my numbers, if you'll sit here and say, oh, they did 100 million. I'm talking about projecting it for next year. And that's all in with confidence. And I think that's all you need to do. Windsurf reached 82 million in annual revenue, recurring revenue, with enterprise annual recurring revenue doubling quarter over quarter. Guys, Railtown isn't something to sit around and, yeah, I'm going to save a couple pennies. I'm going to listen to this chart analyst and, oh, it's going to pull back and oh, I got to go over and I can make some money on that trade and I'll come back. I'm telling you. This took 72 hours to put together. I'm here, slowpoke. I don't even know how to edit a video. But I'm telling you, I understand markets and the emotion of markets. I think I do anyway. And whatever Railtown is planning, it could accelerate. And out of the blue, something like this could happen. And the price could be too attractive to turn down. And if you're sitting around waiting for, I don't know, GTII to get into some deal and then it's going to score, you're going to miss out on the investment very fortuitously that has stepped in front of us listen to that. Who wrote this? This is TC Maxwell Zeph. And I don't know what TC is, but it's under the AI heading. It must be a magazine. Maxwell Zeph. But listen to this. The frenzy around windsurf represents a new peak in the wild race to develop AI coding tools. That is Railtown. And Railtown's AI coding tool helps other companies develop AI coding tools. The frenzy around windsurf represents a new peak in the wild race to develop AI coding tools. In recent months, the businesses around AI-powered integrated development environments have skyrocketed. Windsurf reached 82 million in annualized recurring revenue, with enterprise ARR doubling quarter over quarter. Cognition says Windsurf's user base reached at least 350 enterprise customers. I think that's different than 4 million partners with Microsoft, but I don't know. I don't know the magnitude. With hundreds of thousands of daily active users. Well, hundreds of thousands, Microsoft has 4 million. I assume they use it every day. That's a lot more than that. But we don't know. I mean, I have no idea. I really don't, if Microsoft is the end buyer. But I do know it's in the public, it's on the website. Corey has sold businesses to Microsoft, but we also know Nvidia is there, AMD is there. They gave a list here of the other companies in the competition. So all you need is 2 bidding on it and the price goes up. I hope we have time. I'm not trying, just to be clear, I'm not trying to hype you into thinking this is going to be overnight. I am trying to say to the people waiting and trying to save money, it's going to pull back. You run the risk of missing out entirely. So I'm saying contradictory things. I'm saying you have to act because it runs the risk of happening overnight. But I'm also saying once you're in it, we have to have the patience that it could take 18 months, 2 years, 2.5 years. In fact, we also have to have the patience that whatever the attorneys are working on and the CEOs are working on and the different moving parts are working on, that could take until September. I'm telling you it's urgent, but I could be wrong. It could take longer. But the reward will be worth the uncertainty. We are buying it here. I already bought mine. I don't have any more money. But we're buying it here at 70 cents. We're paying the VC price. We're paying the Kleiner Perkins price. We're paying the Morgan Stanley Venture Fund price, in my judgment. And yeah, hell, we have to wait a week. We have to wait 3 weeks. We have to wait 2 months. And then they finally get it done. That IPO price, if I can call it that, because we're already public, but that next round of valuation, I think it's at least $5, but it could be $7 or $8. And then once it's up in there, in a few months, it could be much higher. But it could take fire like this. It could. So waiting around and trying to play it for a pullback, I think you will regret that. You will regret that. This is one of your times that you just have to put away those trading skills. You just have to put away the instinct that, it's going to pull back. You have to take the plunge, and then if it pulls back, darn it, I could have done better. But I'm telling you, in a few months, you won't even remember the difference. Because saying, darn it, I could have done better is much better, much preferable to, let's say, next summer, the company gets bought out at some absurd price, and you go, I could have, it's like me, I could have owned Bitcoin. I could have been a contender. TechCrunch, this the source of this information is TechCrunch. So in the near term, Windsurf's team will continue working on its AI-powered IDE, while Cognition works on AI coding agent Devin. See, I think Conductor and the other, Langtrex, Railtrex, and Shredder, the work's been done. They're ready to go. They're battle tested. However, I think technically it's self-learning agents. These tools are self-learning, so the work goes on. TechCrunch reported in April that Windsurf's ARR had reached 100 million at one point. Oh, and that's when they pulled back. Anthropic pulled back their deal, so it dropped. But that's because they didn't want whoever was buying them to have access. But now it's reinstated. So Russell Kaplan posted on Twitter, incredibly excited to share that Cognition is acquiring Windsurf. What an insane weekend. From first call after 5 p.m. on Friday to a signed definitive agreement in the morning. Guys, I wouldn't futz around. I really wouldn't futz around for trying to save a few pennies. On the other hand, I'm not telling you it's going to be overnight. So I guess I'm saying two different things. But you got to be in it to experience the potential of an incredible experience. And you got to be in it to experience what I think are just fantastic returns potential over the next 2 years. Either way, you got to be in it. Brandon Neely, thank you, Ward, very much. There's more. I'll read it. Railtown had a breakout from the all-time at 62. Why the pullback? Short selling, day traders, penny flipping. I was thinking when it broke out, we would continue up. Well, I did warn you that there could be some resistance at 62 cents. I think it's computerized because the computers, the things I point out are so basic that the computers are set up there. So they know technicians, traders are looking at the previous high, and that's a chance to sell it off. I think what happened this morning, I showed it to you this morning, when that Wall Street thing came out, it's pretty innocuous if you sign up for it. But the first page that's presented that you can see without signing up and going through it shows assets of 90,000. And I think this was coordinated so that the shorts, if they're ever called by the regulator, they can act like idiots instead of sophisticated investors and say, oh, we didn't know when we got in the stock that they only had 90,000 in assets. Anyway, they sold it. I think this morning was a coordinated attack. I think it was illegal. It didn't hold, and I think their goal was to scare you, make like you might have been, and also to trigger the stop loss orders. And they were hoping it would catch fire to the downside. I think it's a great statement to the strength you guys have that you stood in. Some people bought, and so they didn't get the reaction that would normally work in another stock. And you got to remember that every time there's news, every time there's something good, they're always they're shorting, they're trying to drive it down so they can make the quick trade. They try to take 500, 1,000, 2,000, 10,000 out of the stock every single day. A couple of $100. They're on trading. They're competitive. They might have a pool of money that somebody's given to them. They've got to pay the cost of that money. They've got to perform. They got a wife at home. They've got a cocaine addiction. They got a couple chicks on the side. They got to be able to afford to come on here with a computer and make fun of me. It's a tough life. They got to move. So anyway, a lot of it's automatic. A lot of it's just computerized. So I think it was targeted, Brandon, this morning. I think it was short sellers. However, I also think the computers that are set up to trade algorithmically, that 62 cents is a point of testing. And I told you, I'm not going to go look at my charts, but I told you that what happens is right around that 62 cents. I don't know if it was 63 or 62. You have to look at the chart. But it breaks out, and it did. It's done it twice now. That one morning, the bid went above 64 cents. Yesterday, 62 cents. Yesterday, it went to 64 cents. And I even recall a bid as high as, I don't know if the bid got to 69 cents, but it got as high as 68 cents. And so, yeah, it looked like a breakout. But what happens, Brandon, is if you're just looking at the technicals, when it breaks out, who's they? It could be shorts, it could be a computer, it could be traders. There could be a long that's trading. It's a tougher game trading long because you have to have real money. When you're shorting, you barely have to have anything at all. But they could have purchased it at 42 cents. It went to 64. They got out, and they're using 62 cents. The summary is this: 62 cents is resistance, although I don't think it should be that much. 62 cents is resistance. You puncture through it, you come up, it goes up, then they bring it down to test it. Can they make it go through it? How strong is that number? Is it support? Can resistance turn to support? And in this case, because 62 cents had only been achieved once before, and it's sort of blue sky, sort of that term that there's nothing above us. I think that the idea of 62 cents turning into support straight away, I don't think it would have been 62 cents of firm support. I'm not surprised that they've been able to get it through 62 cents. But having said that, it's a band, it's a range. And I'm also not surprised they couldn't get it below, 57? Yeah, I'm not surprised by that either. I think they're testing the 62 cent as support. And Brandon, soon, I don't know, I think by now, 62 cents will be support. You won't see it go below 62 cents again soon. I don't know which day. But this testing is very normal in a normal market. Add in that they can short stock that doesn't exist, and they can do it at will. There's no uptick rule. There's no settlement, forcing of settlement. There's There's no checking if they're lying on their ticket. There's nothing. It's nothing. It's a big fraudulent market. So the fact that the stock went down to 57 and right now is reflecting an ask, which you can't trust, above 64 cents, but it closed at 61 cents. Brandon, is very strong today. I know you don't feel that way, but this is a very strong trading day for Railtown. It opened at 62.5, closed yesterday at 64. And they, in this attempt to scare everybody, which I think they also published that on its face innocuous report, but the way it was written, the way it came out, you know, they were hoping to scare people. Oh my gosh, you know, and no one got scared. So they traded amongst themselves, Brandon. Most of that selling wasn't real. I'm telling you that. Most of it wasn't real. I could be wrong, but it's just all newly created stock, and it makes you worried, and nothing goes straight up, and it's good. A pause for the cause is always good. So I think today was very strong, and I think how many of you reacted to it was strong. And to have it close at 61, to have the volume essentially meet the 10-day average, it's huge volume. I would expect the stock to be up tomorrow, regardless of whether there's any news or not. And one of these days, Brandon, it'll gap up and you won't feel so frustrated. Your third question was it day traders penny flipping? I think in these stocks, I actually think the flipping comes in the other direction. But yeah, it could be day traders. You're right. I don't see day traders here, long traders, but they could be here. I think they're crazy. I think anybody here buying the stock at 42 and selling at 60 is going to feel like the biggest jack rabbit in about 9 months that you can ever see. I mean, it's Brandon, the upside here, I don't know if you're hearing the numbers I just gave you. The upside is gigantic. It's gigantic. AIP has 160 companies with 5,000 clients. Wow. I'm writing that down. That is gigantic. So to translate that, one of the, to me anyway, as I'm reading it, one of the excitements for Windsurf is Windsurf's user base reached at least 350 enterprise customers. I assume Ward is talking about 5,000 potential enterprise customers, 5,000 clients. Guys, this thing is so big, and I know that your muscle memory is all this loss, all this, deception, all this manipulation by the criminals. I'm not talking about anybody. I'm talking about the faceless, mostly faceless criminality. This is a different story. If I'm reading what Ward has just said, 5,000 clients versus 350 customers here, and they're acquiring them. And I would assume, look, just to be clear, those 160 companies are in a network. They have to be rolled up. But one of the reasons the network exists is to cross-sell. So even if the company doesn't go up into Railtown of the parent, they can have access to all those clients and put whatever the hell, I always forget the word, customer sales agreements. I always forget the term. Enterprise sales agreements together. Imagine, that's 350, that's 5,000 here. It's incredible. Microsoft partner programs, 400,000 companies, not 4 million. Maybe he put an extra two zeros. And Danielle, it doesn't change the magnitude of what can happen here. It changes the magnitude of the number of partners, I guess. But if I did a bad arithmetic because of that, if it should have been 400,000 instead of 4 million, it's still the range. And that's why maybe nothing will happen now. Maybe it waits until there's a bigger build up of customers. But it's just a conceptual theory. I don't know how to comment because I don't know which number is true. Did you see the news on G-Bucks that came out today? No, I can look at it. It's been a nerve-shattering experience for me, sir. Is it good? G-Bucks, Alula, be my baby. Yeah, see, that's some news. Account settings. G-Bucks, a publicly traded super app and charitable giving program platform, today thanked shareholders who submitted statements of their holdings in response to the company's special warrant dividend. The company said it is currently reviewing and verifying shareholder submissions and expects to finalize the distribution calculations early next week. The GiveBucks directors approved the warrant dividend on May 21 and confirmed the action in a Form 8-K filed with the SEC on June 9th. The GiveBucks super app revolutionizes shopping by offering a user-friendly tool to make purchases swiftly and easy at over 100 national retailers, along with an expanding roster of local merchants. Can I stop? Finger is getting pounded. Let me see where Finger is. It was up after hours. It closed down 14 cents, 175. We can talk about their earnings. I just got to pull them up. Do they have a news story? I'd rather go through this first, but let's see if they have a news story we can go over. That'll be on the agenda when I get to the bottom. 8 hours ago. Okay. I'll read the earnings out, but I'll do it at the end. What email can you contact me? Farrand Balanced. My last name, Farrand Balanced at Gmail. Farrand Balanced at Gmail. Let me write it down. I need to be more organized. Bee-bop-a-lula, be my baby. Bee-bop-a-lula, I don't mean maybe. That's it. Jason, let me show it to you. Fair and balanced at gmail.com. It helps pronounce that sequence helps pronounce my name correctly. I haven't seen the emails. I haven't seen them yet. I was going to look last night. I got on 2 calls. I took some medication for gout, and I just said I'm not. And then I got up early this morning, so I saw the collapse. I got on without. Anyway, I'll get to it. I got it. Oh yeah. Northwest. Sorry it went on so long, Northwest. Good for you, Northwest. You got a great position. And where did I write down today's totals? Oh, here. Right here. We didn't add much. I'll make sure I have you down for that, but we didn't add much today. But it's good. It's better than nothing. Daniel is right, 400,000. So my analysis was too extreme. So just bear in mind that kind of concept. I thought it said 4 million. So, but my point is, because people do not understand why the big companies would pay so much, and why don't they do it themselves? To go from the risks of development and the time and the frustrations of development and that valuation to suddenly get into proof of concept that works and it catches fire, as apparently these are doing, the buyers don't mind paying up that valuation curve. They don't mind going up that curve. In exchange for, they don't have the risk that it goes bust and the person making the decision loses her career. Or they do it because they can control internally what that acquisition looks like. I mean, I've seen it in other industries, and it's not a... So you can take a company that has proved its concept with a certain number of clients, and if you can buy it in and you have an enormous client base looking for the same thing, you buy it, you put it out, it's all internal. There's no resistance to your sales job. There's, you just say, hey, you're part of we've improved our services. Put it in, and all of a sudden you just have a gigantic internal rate of return for that acquisition. And that helps when you talk to shareholders yourself. So I'm sorry, Daniel and Ward, I thought it was 4 million. It's not as exciting with 400,000. But I think the concept is still there. I think the concept is... So Windsurf is leading the race for now? I don't know about that. I have no idea. I'd have to ask if somebody like Corey. I have no idea. I'm not even sure they're in the same race. I'll tell you my instinct, but I could be wrong. I think Windsurf addresses an open AI that goes out for free, I think, from what I read. Anyway, it's a much broader product. I think what Railtown does is very specific to small, medium, even large companies software. Now, I guess they got a deal with Goldman Sachs, this other company, so maybe I'm wrong on that. But my second point, and I think Railtown's product is ready to grow. I don't have the impression, but I don't know that either. And in fact, I would even go further. I'm not convinced that Railtown's product wouldn't help them do what they're trying to do. But anyway, I don't know any of that. But I think Railtown being designed for business is better than being designed for, but then again, I guess they got Goldman Sachs, so maybe they're designed for business too. But it's a huge market, and there's going to be room for so much out there. And this company, I forget what it's called, Cogent, whatever, bought, and then Google licensed part of it. That means the rest of them out there, Apple, Microsoft, Nvidia, AMD, you name some others, they're going to want to acquire and keep up. So no, I don't think Windsurf is leading the race. I guess we just don't know that answer, because right now, Railtown is being held back by the line judge and the referee, back behind the starting point. The wind has moved the starting gate forward, and we're just waiting for the judges and all the sailors to get on the boats, and then they've got to move to the starting line, and then the race can begin. And I think the starting line is $5. Could be $3.50, could be $7.50. We don't know the number, but whatever it is, I think the starting line is a higher number. And we don't know how quickly Railtown can layer in revenue. We don't know the target audience that Windsurf is appealing to. I know Windsurf now has to go through an absorption and a getting together. There's a whole period of time they're going to be creating their new team. They did get a good sale to Google. I don't know how that's going to work out, but we don't know enough about Railtown, dude. They've already announced 3 enterprise sales agreements minus the revenue. We don't know if they have others. Out of the 5,000 clients that AIP has, maybe they're gunning to go with all those. I don't agree with you. All we know is we can't tell where Railtown is in the race right now. We just don't know. So we have to wait. I wish this deal would finalize so we get the attention Windsurf is getting. I agree with you. Railtown will get press just like that. I believe it will. This is the quote unquote hot market right now. It's where the excitement is. Yeah. This is probably an accumulation zone. I think so. I think it's been a gift. Look, when the stock's $150, I think it'll be cheap. When it's $5, I think it'll be cheap. $10, I think it'll be, depending on when it's $10, I think it could be cheap. But oddly, that's not how I look at it. I look at it as how many shares can you own? because the 18-month target just blows everything away. We'll know more about that. It's all speculation right now. But whether you pay 50 cents, $1, or $5, the number in 18 months could astound you. It might take 2 years, might take 2.5. We don't have that information yet, and that's why I would love to see the merger finish, mainly because I'd like to see if they can put out any information about revenue and revenue growth. And I'd love to see their strategy of rolling up the companies so that we could also make a projection of how many shares will be outstanding. And then you can start making sensible guesses at what the value might be. If you know what the revenue is out of the gate, and you can get some indication, the key is repeatable, but you can get indication of the growth. Maybe you get an indication of the addressable market. They've captured part of the addressable market. When this report was written, they're talking about it's not all captured. 3 billion they're saying there. But with the AI partners, they went out and bought a market. They bought a market. Now they have to cooperate with everybody. I assume that part of the network deal, I don't know this, it's what I would aim for, is sort of a ROFR on everything, a first right of refusal on being bought out, being acquired, doing a licensing, but I think it's all going to be friendly. They really like the conductor product. So Railtown purchased a segment of the market, which I understand now is 5,000 clients. That's a natural place to go get revenue. And if somehow we can get a sense of the magnitude of that market and how quickly they're converting potential into enterprise sales agreements, and I'm sure research analysts will do this for us. We don't have to do it ourselves. But if we can start seeing that revenue, this one that everyone you say has is leading the race for now. I forget the name right now. Let me see what Windsurf. That's 80 million in revenue. I can come up right now with what I think are defensible projections that Railtown will get to double that or more very quickly. The problem is it's all based on guesswork, so it's meaningless. It's just meaningless. I think there's a chance that once this deal is completed, the amount of information that has accumulated over 5 months, they haven't been able to talk about, could really amaze us. We'll find out. They did release 4 press releases, I think 4. 3 enterprise sales agreements without the revenue. And then that one product. They had some press releases about lane tracks and rail tracks, sure. But a lot of this material information that no one can know, we're not allowed to know. Some of it will come out, and it should be pretty powerful, I think. Hey, Phil, thank you. Hey, Sanoa, not war. Yeah. Rail could be working on a bigger deal than Windsurf, and that's why it's taking long. I don't want you thinking that. I'll take the blame. I don't want you to think that way. I got all excited by the numbers, but we don't know that Railtown's working on anything like that. at all. I don't know that. So that wasn't my point of my excitement, is that you should be planning on a buyout offer next weekend. I'm not saying that. What I'm trying to say is that the valuations are climbing, the excitement is there, and if I were Railtown, I wouldn't sell now. Railtown, to me, can really build its revenue base quickly, and then maybe they're a unicorn and they stand on their own. I don't know, but then they can make an arrangement, and I think it can be a truly astonishing numbers to us now. But a lot of that is obviously speculation. It's all extrapolation. So all I want you to focus on, Brandon, for now, all the rest of it, and I get carried away because I don't want the boo birds. I don't want them getting you to sell today. But I think the only thing that I'm highly confident in is that Railtown, when it comes out of this suppressed price level for various reasons, is going to make a leap up the valuation curve essentially overnight. Will it be overnight? No. Maybe it takes 2 weeks. Maybe they get shareholders approval, it takes 6 weeks. I don't know. But in the context of the overall investment, it'll be very quickly. And I think that leap is 10x. That's according to me. Could I be wrong? Sure. It could be 3x. It could be 5x. It could be 12x. But that's what I want you to focus on, is there is a value jump coming soon. And because of that, I don't really look, it's a speculative stock. We don't know. There is a reason it's selling at 70 cents. You know, there's some major pieces to the puzzle to come in, but I don't really see a lot of risk in the stock. I suppose if the deal fell through, it might pull back to 35 cents, so half the money in a short period of time. But then it's just a matter of time. I think Railtown on its own can get to the numbers that this research report said. So I just don't see, as long as we stay cool and we're willing to wait, because that's the one thing that is unpredictable is time. I don't see the downside in this stock. And I made that decision. I was willing to to me, it's in the speculative realm, but relative to other speculative opportunities, to me, I'm willing to exchange the fact that I feel you're not going to get wiped out. Just not going to happen. In return, and you have exposure if you wait to, I believe, incredible returns. I'm willing to make that trade instead of being in things that might happen, but I could end up waking up and it's, you know, I'll make that swap out so I can sleep at night, although I'm not sleeping at night any day long. All right, let's go over the finger motion results just quickly. Which immediately my enthusiasm drops a little bit. But I think Finger has some good things going on, and I think they're I know those guys are working very hard. They've got such a great asset in their investor base, in all of you guys in it, in their connections in China, although I think there's an upheaval going on in China right now. But I think they have those contacts that will remain, the trust they've built up. I think the surprises in Finger that can come at any time is Sapientus, the big data. And that can turn the company into something exciting. But anyway, let's read this. July 16th, Finger Motion, a mobile services data and technology company, is pleased to report its financial results for the first quarter of fiscal 2026, ending May 31, 2025. It's on EGDR, but let's just go with their summary. Reported quarterly revenue of $8.46 million. So 8 times 4. Yeah, it's still, they're annualizing at that basic $35 million a year revenue, maybe a little bit below. So that was a 1% increase compared to Q1 of fiscal 2025. So year over year, they're up 1% in revenue. Telecommunications and products and services business revenue was $8.31 million. So that was the bulk of the revenue, down slightly. The Daji platform grew to $10,938 compared to $463 last year. This is new information. Command and communication segment contributed $109,000 in revenue compared to nil. So I'm going to guess that those 2 trucks that they did or whatever they were last year, they sold them and they got paid. So I don't know what the net profit is. That's good to see. That's good information. Go from 0 to 100,000. Big data garnered 27,000 in revenue compared to 0. It's good. Right direction. Cost of revenue increased a little bit. It increased to $8.31 million. So they had a gross profit of $152,000, which he predicted. He predicted profit. But they had operating expenses of $2.14, which is down. Net loss, and remember net loss, I don't know the industry. There's so many things they're in, but sometimes losses are just, accounting things. Anyway, net loss attributable to shareholders was $2 million, which is up 21% year over year. Reported basic and diluted loss of 4 cents as compared to 3 cents year over year. May 31, Finger Motion had $2.86 million in cash. That's good. A working capital surplus of $9 million. That's good. Shareholders' equity of $16 million. Sounds positive. May 31, 25, total assets were $55 million. Total liabilities were $39 million. Total current liabilities, $39.49 million. And then total liabilities of $39.51. So their liabilities are current. Is that from the roll of the minutes? It must be. So let's see the comment Martin Shen said. While top line revenue showed modest movement with margin pressure driven by evolving business dynamics, we are encouraged by the initial revenue contribution from our command and communication platform. I agree with that. He should be. As well as the steady build out of the Daji and big data businesses. Our focus remains on building higher margin data-driven business lines, refining our operations, and executing on our strategic roadmap. I'd like to know on those vehicles what the profit margin was, but I'd also like to know if they get an ongoing data revenue, a subscription model or an annual model on the data that's necessary to run those vehicles. That would be exciting because that's where the growth can come in. I'm not selling anytime soon. I'm much more relaxed, not holding a squeeze gun. Yeah, that's what I'm trying to say. There could be a squeeze here, Donna, which I dread. I dread it. I hope not. I hope not. But I don't have enough information to come up. I obviously screwed up, and I apologize to Ward and to Danielle. I shouldn't have made that calculation. I did it on 4 million. I should have done it on 400,000. So that's the risk of just trying to guesstimate. But if we could, maybe there'll be some management discussion too. Who knows? But if we could do some extrapolating, we might be able to determine what is, if, I hope, like I say, I hope there's no squeeze. But if there is a squeeze, we might be able to determine a range where you trade some and try to buy it back. But it's so risky because if you win, that feels good. But it's a high wire act. I think the problem is, Donna, we're so aligned to this retail thinking that we've evolved into. I don't think any of us meant to start out this way. But the buyers that are going to come in for Railtown are going to have this frenzy on their mind. That kind of thinking is just, it's like energy running through Palo Alto, Canada. Even those slowpokes up in Canada will feel it. Just kidding. But it's an energy that's just going to course through VC, wealth advisors, wealthy clients, investment bankers. It's going to be all the buzz. And I think getting out in a squeeze, trying to pick up an extra 10 or 20% share position could be really risky. So I'm going to be inclined, depending on how high it goes, I'm going to be inclined to just say, let somebody else do it, because that took a weekend. I'm not saying it's going to happen here. I really am not, but it took a weekend. So you could get out in a squeeze and you're, on a Friday and you're waiting to buy back Monday or Tuesday because they come back. It could just by chance be the weekend that, who is it? Alibaba comes in and buys? Just kidding. Could be somebody. I used that name because I don't know. We'll find out. So I feel like I'm running out of things to say. If anybody has questions, I will attempt to answer them. Let's see if there's any news. Ghislaine, ready to testify. You were right, whoever said that. Israel conducts massive strikes on Damascus. What a friend to have. When you need a good friend, you need somebody that picks fights with everybody. Just as you're trying to control your budget deficit, just as you're trying to get peace in with the Russians, just as you're trying to rebuild your infrastructure, rebuild your energy grid, keep Congress, change the trajectory of healthcare and immigration. You need a friend like Israel. You really need a friend like Israel. You should invite the prime minister to the White House every month. With a friend like Israel, you're going to be able to make America great again. Oh my God. Oh. And they control the media. They control the message. You can't talk against them because then you're anti-Semitic. Oh, do we have to go through this? I guess we do. We have to see it through. Well, what's this? Let's read this. Let's temper our enthusiasm. This is again by Tyler Durden. AI bubble is now bigger than the .com tech bubble at its peak. You know, that's always something we got to keep in our mind. This time is different. I think it's different this time because AI 2.0, I think, is different than AI 1.0. But let's read what he says. Because he's going to talk probably about the MAGA 7. This is different, I think. But anyway, let's read what he said. Last week, Deutsche Bank's head of thematic research, Jim Reed, published the latest must-read versions of his charts that make you go, wow. Got to pay for it. I'm not going to read the charts that make me go, wow. Which repeated a chart that the Deutsche strategist has used before, namely on e-tracking the earnings of the largest 10 companies in the S&P 500 around the market peak of 2000. Yeah, this is what we know all this. We can go through it. This is the risk. We know about it. It's the overall market. Not all stories are the same. Some companies have thrived. Microsoft stands out with earnings increasing tenfold over the last 4 years, since 2000, I guess. And to be clear, this isn't an anti-earnings narrative. S&P 500 earnings overall have outpaced their long-term average during this period. The point is how unevenly the gains have been distributed. Total equity return of those top 10 companies from 2000 to the present. Microsoft leads the pack with 11% per year, but only 2 of the 10 have outperformed the S&P 500 over this 25-year stretch. 2 have delivered negative returns, and the bottom 5 in the legend have all returned less than 2, whatever. Looking ahead, the question is, would you rather own today's top 10 S&P 500 names for the next 25 years or Railtown? He says, or a tracker of the rest. Personally, Reed says he'd go with the rest. And that's how the market can recover. You can have a crash, leadership moves elsewhere. So Apollo's Torsten Slok would agree, as the private equity giant's head strategist and former Reed colleague writes, the difference between the IT bubble in the 1990s and the AI bubble today is that the top 10 companies in the S&P 500 today are more overvalued than they were in the 90s. Okay. Yeah, we're aware of that. That's all it said. That's all it said. I'm just going to see if there's any other important news, and I think I'm going to sign out. Michelle took Barack back. Changed my life. Wow, President Trump says Coca-Cola has agreed to switch to real cane sugar. No more high fructose corn syrup, which is really bad for people, bad for me. President Trump supports appointing special prosecutor to investigate Epstein case. Can that recover? Can that recover? Maybe that recovers him. So California, they're going to transform all those wildfire lots into low-income housing. Move to California. Yep, there it is. Israel launches strikes against Syria. Netanyahu criminal trial adjourned. It's good. You know, when you need friends, it's good to have a friend like Israel. All right, one more or two more places to see. Shocking memo. Oh, gosh. Shocking memo reveals Judge Boasberg, D.C. judges admit bias against Trump. Okay. There's a tsunami warning in Alaska. Rhino Congressman Maria Salazar introduces bipartisan Mass Amnesty Dignity Act to provide earned opportunity for millions of illegals to stay and work. Yes, they broke the law, but, well, I mean, if you make it legal, I guess, make it legal. Johnson & Johnson scientist who admitted, you know, the thing was not safe and effective flees into woman's bathroom when confronted. All right. I think I'm wasting your time. Let me just go to one last place. Yeah. There are going to be gold and silver stocks to buy. Aya, I like Aya. We'll talk about that tomorrow. All right, I'm going to sign out. Thank you for showing up. Thank you for staying strong. It could be tomorrow that the stock is $1. Then again, it could be August. But every chance we have to add to our position, hold strong. And don't let these fear mongers panic you. It's a different kind of stock than these other stocks. So anyway, thanks for being here, and I'll catch you on the flip side.